very welcome to the show. It's Straight Live with IG with Rich T. Biscuit.
And happy November. First day of the new month. We're all ready to go. How are you all?
Good to see you. Lots of comments already coming through. Good morning, all of you out there. Glad to see you so early and up. Maybe they were out celebrating Halloween and just patched in.
That was the very funny thing about it's been quite a few years since I've been on the underground at 6 a.m. And especially on the 1st of November, I saw 3 different people coming back from clearly a good night out, doing the walk of shame on the underground this morning, including one Spider-Man. And he had the full outfit still on. Absolute class. If that was you, I'm sure you're tuning in now as you get home. Great outfit. Good
I also learned yesterday that slow gin doesn't go very well with Malbec.
Ooh.
And so there was a lot of Malbec going on as a bunch of friends took turns to kind of like, you know, give out sweets and things. We were all drinking. And after 5 glasses of Malbec and 3 shots of gin, slow gin.
This was your Thursday night?
Yeah, yeah.
Oh, Angeline's been on one.
Should have just stuck with 1 and not mixed 2. But yeah, feeling a bit husky. Not as husky as him though.
I've been husky all week, haven't I? Good stuff. Well, we had a really interesting move in the Nasdaq yesterday. We're going to cover UK gilts. What else have we got coming up? Who's our guest today, Ange?
We have the one and only Axel Rudolph, because Chris Beecham, Beachy Head as I like to call him,
this is his holiday, right? Okay.
Yeah, away. So Axel will be with us also across all the big names that reported overnight. I did patch in, much to the consternation of friends, because they're all kind of like still drinking like that going, hi guys, it's okay. I'm just doing a bit of work, checking on Microsoft and checking on to make sure my pension isn't turned south.
Excuse me. I see we've already got questions coming in for confirm and send on the chat. So yeah, confirm and send on the chat. So yeah, any questions you've got, especially around yesterday's move. As I say, we got a lot covered there, as well as the big numbers from Apple and Amazon. So let's straight to overnight act. Yeah, the repercussions of quite a high skew to the downside. So if we go back if we go back to August the 5th, you remember August the 5th, Ange?
Yeah, I do remember. Painful.
Yeah, bit painful. That Monday morning went to the big move down 12% in 5% in the Nasdaq. That creates a scar. Remember that. So what we're still been seeing over the past couple of months is that yes, the market's going up, so people are definitely buying their long. And this is, I'm talking about the big funds, the institutions, but what they're also doing is they're buying protection, because they do not want to suffer that August 5th headache. Low delta put options as well. So that's been shifting the skew. Who do they buy it from, Angeline? Who do you get your options from? You call up your friendly investment banker.
Or you go onto the Tasty Trade platform.
It's a red Thursday. It is Thursday, October 31st, 2024. This is Overtime. I'm your host, Chris Vecchio in New York. Ilya Spivak in San Francisco, Dylan Radigan in Milan to take you through the rest of this half an hour, because it's the abridged version for this Thursday. And what a Thursday to have an abridged version. Really shouldn't, because markets are spilling over. But perhaps we should, because at the bottom of the hour, the prediction trade comes in, and there was an 11-point swing in betting markets today from Trump to Harris. Perhaps that's behind the market decline. A little dose of reality here. But it was, of course, the earnings yesterday. Microsoft, Meta, which we thought were pretty good, and the market reacted to fairly nicely when we were on Overtime. Ultimately, the guidance was weaker than anticipated. We get off to a bad start today, and it gets worse over the course of the session. More geopolitics overseas. Several people killed from a Hezbollah missile strike into Israel. Iran apparently getting ready for a major retaliation against Israel. So I guess we're back into the thick of geopolitics, Dylan, which sets up one of our favorite trading opportunities that we've come to know and love. But before we get there, of course, remind everyone, if you're watching us on YouTube, join us in the chat. Tell us what you're trading today. And first off, let's just talk about the stocks here. Ilya, you're resident bear. When I'm the resident bull and the markets are going up, Dylan and I go back and forth, super glide this, oh, you poor bear. So have your moment in the sun here for a quick moment.
It's working today. It's working. I came into this week mostly in NASDAQ put verticals in the queues. But since then, I've also added against any sort of fundamental thinking and really just in the spirit of being ticker agnostic, a bearish bet on the Dow via DIA put verticals, just because the price action said we broke down, bounced, we're at resistance, it's a setup. And that's working. I've also started to put on some shorts in European markets, which broke down. The Eurozone stocks index broke yesterday. I have exposure there via FEZ. EZU actually had really outsized vol yesterday, so structuring the trade there was kind of spotty. But I did it in FEZ instead, and the vol profile was different, and that works today. So needless to say, this has been a pretty good day for being short. I think the biggest question now is continuity, because you haven't really crossed any red lines, especially
days like prime big deals, but there were more. NFL Black Friday. Do you ever buy stuff on NFL Black Friday?
It's not one I tried to get into an NFL game when I was in Vegas this time last year. And normally in the UK football matches, you can always get a ticket from a tout outside, right? Mm-hmm. Not a single ticket on sale outside the ground of, I think, 80,000 capacity in Vegas. So, yeah, I lost my chance to go and see NFL there, unfortunately.
So not just about, and IG used to sponsor NFL. I think they've stopped the sponsorship now, but they used to. And not only did they say good things about the outlook for the shopping season, but what I liked even more, this is why I watch these stocks, because I hold NVIDIA, both on the very long front and also trade it on the short front. But they said that the AWS side of things, they still see triple-digit year-over-year percentage growth. And the fact that they have committed and reiterated this is, for me, a strong conviction signal.
And what Jassy said on AI spending as well, just to obviously the read through to NVIDIA and it's a once in a lifetime opportunity. That's what Jassy sees as his spending on AI. So they are going fully in on the CapEx side of things there.
So just whacking up the Amazon chart, if you look at that, and also just going out further, just to show you how what a climb. I mean, it's really been on a tear since December 2022, and you know, it had a bit of a fall, a bit of a blip there at around July of this year, but quickly then recovered its footing from around early August.
Now, shall we have a look at something in contrast? The Apple move after hours. Not great. Best described as lackluster guidance. Weak China sales. Yet again, we're seeing that. That must be one of the top comments out of all numbers this quarter. But yeah, Apple down almost 2% after hours. And yeah, just cautious guidance on that holiday season. So not great.
And yet again, this holds true, trader friends, to the whole kind of like, it's not about what that stock delivers for you now, it's what will you bring me tomorrow, right, Rich?
Yep. No apples being brought. Yep. No apples being brought to teachers at school anymore. Being brought to teachers at school anymore in China, apparently. School anymore in China, apparently. So yeah, that's China, apparently. So yeah, that's created a real two-way pool in the market, right? Yeah, that's created a real two-way pool in the market, right? It's a little bit of a nothing done. So the futures we are seeing P up slightly. 20 got the Nasdaq up after being down over 2%. So far of the day is oil up 2%, and that's not. But also, there's noise circulating about a potential retaliation from Iran. That's what's caused that move there last night at about 6:30 p.m. Now, of course, that shows up in today's move. So we had a move, from 69 up to 70 bucks 58.
Intel. I want to also take a look at Intel, because we did have quite an interesting few lines from Intel. They surprised with solid earnings and sales, but unlike the print that we saw from Microsoft, they say that success in AI revenue remains elusive, and that to me does cause a bit of concern. What I do like, though, is that they did stick to, I believe they stuck to its guidance, and then they also talked about, delivering this net loss. The guidance topped estimates, I beg your pardon, but Intel delivered a net loss of just under 17 billion in the quarter, much higher than the 310 million profit it recorded in the same period one
Yeah, that was
earlier.
just a write-down.
Yeah.
So yeah, that.
So do you like? Is this one you trade, Intel? Is this in your portfolio?
It's not been since we had that rumors around the potential Qualcomm deal. But we're at exactly the same level. It was 2280 that I remember selling out at that point. So if we go to a wider chart, you can probably see, the fall off there in the past 12 months. But we had that little bump about a month ago from 20 bucks up to 2280. So that's it's much of a nothingness since then. Now, first day of the new month, good chance to look back on what happens in October. Of course, many people scared of October. It is generally thought as a month where spooky things can happen. Not this year. S&P up 2% on the month, Nasdaq up 2.8% on the month, and FTSE 100, that was the underperformer, of course, down 2.5%. So a 4.5% differential between S&P and the FTSE.
And you have a FTSE trade on, don't you?
Well, yeah, that leads us perfectly on to this budget. It continued to be concerns around gilt yield. So as we mentioned on the open yesterday, this is the only thing you need to be watching to get an idea as to how this budget's being taken. So gilt yields hit a one-year high as investors take fright. That's all that is being spoken about this morning. Moody's have come out and said that the budget creates challenges as it warns of muted UK growth. She's not leaving herself much of a buffer to absorb unexpected shocks. That is one of the main worries, and also the Times running a story that they may have to come back and raise taxes again in April. So we get 4 months, 5 months to the next budget, and there's concerns around that she's going to have to come back and raise taxes again because it might not be enough.
I think you're right. I was concerned about the ISA front, as you know.
Yeah.
Just
yeah,
before the
got
budget.
away with that one.
The budget.
Got away with that one.
Because I thought she might actually, stick her fingers in that too. But it is going to be in her fingers in that too. But it is going to be interesting, and I am watching the gilts as going to affect a lot of people. That's going to affect export. That's
the estimates are maybe a little bit much they're actually going to raise from these things. It was coming out of Westminster, but I saw that gilt move down. Things they think that it was coming out of Westminster, but a little bit optimistic. That's why you saw again yesterday. Look at it roll over here. The pound as well. Pound selling off again yesterday. Look at it roll over here. What started to really hurt the currencies? We've had a little bit of a move higher, 20, which is where we were this time yesterday, but keep an eye on that, especially around keep an eye on that, this time yesterday, but year moves as well.
Do you know my favorite
For us greatly, farm payrolls. Ironically, that
line of the week on Reeves?
When that US 10-year moves as
Fed, what do we do now? Line of the week on Reeves. Looking to him for this hack Reeves's budget. It came, looking to him for this. Do you remember what he said? Spend it.
What do I need to bench 67?
I just have to. Because he was buying me time, and that was to perhaps re-enter. But
that's going to jump, and so oil price must be about 2% higher than where we went home.
Will it jump? I'm a bit concerned. I always kind of think number of times when I've just left it and then thought, yeah, it is going to jump, and then it doesn't. I'm like, oh.
I would imagine we'll have a look at the pre-markets, but I would imagine that.
Well, as you're looking at the pre-markets, lots of comments coming in thick and fast from our viewers there. Good morning to the British Indian. I hope the clock there is really helpful for you as you move, watching us live from one room to the other. Dan Sands saying markets are taking a spooky dookie. Is that what Florida is saying? I've never heard of spooky dookie. Then Dale's boy says might have less farmers after that budget. You're right. You sound like you know farming, and they are still having.
Dan Sand going in with the for the finished correction. So might have to wait till after the non-farm number today, and then going long with the 10 to 15 days to expiry long calls. So that'll take us 10 days. Is that well, where are we? Yeah, almost November. Expiry, November monthly expiry you'll get for those.
We also have a question from B. Haas. What is the AI index on the IG platform? Is this UK-based indices or USA? And what is the symbol of these indices on TradingView? We will get that question answered in one of the confirm and sends for you, Mr. or Miss or Mrs. B. Haas. Victor Rankin. Hello, guys. You guys trade equity or FI? We definitely do. Let's take a look at
equity or fixed income. Yeah, we look at a bit of everything. We look at
everything that moves.
And commodities and FX as well. Right, now what have we got in Europe this morning? Well,
one of them, looking out for that because that could move. We had some news overnight.
Lufthansa has received a good old upgrade from, a downgrade from HSBC. Price target €7 they've put on that. So Lufty's expected to move down 1.5% to 2%. And then Repsol has also been cut to equal weight at Barclays. That's a €15 price target. But the mighty Societe Generale, big day yesterday, remember, that's been raised to overweight at Morgan Stanley with a price target of €36. Now, it was so strong yesterday, it got up to 26. So they see another 9 euros of upside there in Soc Gen.
Interesting. Boohoo, this is that retailer that sells fast fashion. They're changing of the guard there. They've
Dan Finlay from Debenhams.
Yeah, as CEO. And this is due to amid demands from Mike Ashley's phrases. So, Finlay was also formerly the CEO of JD Sports and currently the head of Boohoo's digital department store unit, Debenhams, as you said. But what's also interesting about this is Boohoo, one of those that is trying, if you look at the chart here, trying to, at some point, I mean, this is a really painful chart, people. I don't trade Boohoo, but if I'm pleased I haven't, because it is been at the 29 handle for some time. Look at that chart.
Oof, they're right. We've got some news I've just seen in Reckitt Benckiser. Are you a holder of Reckitt's? If you are, you're going to be very happy this morning, because Abbott and Reckitt's have reportedly been found not liable in the premature baby formula trial. That big move for Reckitt's there. That's going to open up 3 to 5%. Let's get you a chart there on how long that has been going on.
Look at those moves lower, March and also the 18th of March. Yeah, here we are. So hopefully this will give it a bit of a bounce. You know?
That's, yeah, up 3 to 5% Reckitt's is looking. So that was a... Let's get the exact story there. Right, here we go. Abbott and Reckitt unit Mead Johnson are not responsible for a debilitating intestinal disease, a jury found on Thursday in a lawsuit accusing them of failing to warn. A victory for the two companies following large losses in similar trials. The verdict was after a 5-week trial in St. Louis. See if there's anything about an appeal.
Also, the luxury sector could move today after Estee Lauder pulled its guidance for the year. This is what we've been seeing all week, right, Rich? This oncoming trend of downward China news. We saw it with some big manufacturing companies. Now we're seeing, we heard it from Kering, and now we're hearing Estee Lauder saying that they're pulling their guidance, citing uncertainty from a new chief executive, but also weak demand in China. Well, the big one yesterday was Apple, of course, not getting any love out of China as well.
Excellent. We will be back in 5 for the opening bell. Join us then.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into 3 key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Welcome back, everybody. So we're about to get the first trading day underway of the new month. Just a quick note on that advert. Still tickets available in some locations, not London. London ones are gone. So don't wait too long to get your tickets on tastylive.com for Tom and Rich's tour of the UK next week. 2 weeks time, November the 11th onwards.
Now remember, you have to sign up. Sign up. Don't be that person that waits out there and then has to like have this, you know, you're going to create this queue of people and everyone's going to be trying to get a connection to try and fill the form. Don't say, I know Rich, I can go in, because that's not going to work either. Or I know Anne, she said I could come. That's also not going to work. So you need to sign up if you are wanting to go.
Right, what level have you put in to sell your shell at? Because I think that's going to be higher.
You think so?
Well, it should be. Oil's up.
Okay, so where do you want me to put it then? Where do you want me to put my...
Well, I would...
Where should I put it?
Yeah, I wouldn't... At least up 1 to 1.5, surely.
Okay.
Reckitt's, let's get that one up for the open. We have 30 seconds until we get that open. I think Reckitt's could even go into an extended auction, possibly. Reminder that if you, we're a bit early on that, still 26 seconds to go. We can have a look at our lovely faces for another 20 seconds. Yeah, Reckitt Benckiser, is it going to go into an extended auction? If it's looking to uncross more than up 5%, then we won't see it open until 8:05. So, Ange, you want to give us the countdown to the November fun?
Go on! 3, 2, 1! Here we go! Reckitt.
And they're off.
Oh.
I'm glad the clock's accurate. On the Credit Suisse trading floor, it was 10 seconds late.
No.
Yeah, it
How is
was
that
like,
even possible?
Come on. There's
Reckitt-
one job.
Still waiting on Reckitt here, people, if you're waiting on that one as well. But just having a look at some of the others that I am watching. Let's have a look.
Bars Iron Brew. Iron Brew, the big performer, up 1% on the open. Flutter down 1.5%.
Oh, nice one, Ridge. You're right about Shell. I walked up my take profit level.
Good.
Oh.
Boohoo up 4% on the back of their new CEO. They've our ex-CEO from Debenhams, Dan Finlay, the new Boohoo CEO. Tried to put it all together there. So we got up 60 basis points in BP. Kingies up 70. WH Smith up 90 basis points. SocGen benefiting from that upgrade, up 2%. €36 price target. Is that possible? Wow.
It's wow. Some of the miners also on the leaders board, the Antofagasta and Rio Tinto up on the leaders. So let's take a look at the losers. Flutter down 1.5%. EG Jet down 1.5%. Pega's not going to be happy about that.
We still got that Vodafone still losing its track. Let's see what the buyback was yesterday. Have they taken back their 17 million? So they're obviously a bit more confident than they were in the last few weeks. So Vodafone now back to their best of the buybacks. I am surprised that that share price is still lagging. Now, down 60 basis points today, 71.5. I'm actually going to have some of those. 40,000 to buy at 71.72. Right. Is Reckitt's open yet?
No, not yet. Not yet. Still
So it
waiting
is extended
on Reckitt.
auction.
Looks like it. And I am watching it like a hawk. So let's take a look at the all sessions now whilst we're waiting on that. Here we are, all sessions coming up for you. And on the leaders board, Intel up 7.5%. Robinhood also up 2% after a strong session previously. NIO, the EV maker, the Chinese EV maker on the premium end, up 2% as well. It has been hurting for some time, that stock, and lots of concerns around its business model, which is built upon battery changes and those hubs. Taking a look at the losers as well on the all sessions, Merck & Co. down almost 3%. Supermicro Computer down as well quite a bit, and MicroStrategy can see some people profit taking there after it had a good day in the previous session.
Right, Boeing. One of the stories overnight came out 11 p.m. last night. Boeing workers will vote on Monday on an improved contract, 38% rise, up from 35, and it's now over 4 years rather than 5. So also a larger signing bonus. So they are clearly desperate to get the deal done there. Boeing workers voting on Monday. So that stock up this morning as well. We're seeing it up 2.5%.
PCM saying that they should start a union. Boeing also had a really several strange headlines coming out. I don't know whether you saw them yesterday, but Boeing reported that Boeing said it's going to get rid of its diversity and inclusion.
Oh, that's not very PC, is it?
But yeah, that slipped out sort of late yesterday. No sign of awakening yet for Reckitt Benckiser. What on earth is happening?
We need the PCMs with their level 2 data. Remember,
Hey.
level 2 lets you see where the auction is uncrossing. I think I might sign up for that today.
Yeah.
Because I feel like I might want to be a part of Reckitt's. Let's see if we can find out where it's uncrossing. Well, we've only got 1 minute left.
I'm going to check Lufthansa just to see what's happening there. Lufthansa is down 1.3%. Having a look there for you.
On
This
the
is
back of that downgrade.
Yeah, that's a look at the minute chart. trader friends, that's a minute chart, so you can better see the reaction there. That is off the back of the downgrade, you can also see that Jefferies in the previous sessions follows on after Jefferies initiated their coverage of European airlines, warning of further turbulence ahead.
Right, so are we going to see Reckitt's open above £50? So that's 5% must be about 49.50. So up 5% would be around the 49.50 level. Are we going to see it back up to £50? That
is the question.
If you look at the chart here, if it opens up at £50, that's where we were back in March on that first move lower. Let's see, that should be uncrossing any second now.
If you want to have a look at the German market, producer Fred's going to keep an eye on it too. The German market, the winners at the moment, Total Energies, probably lifted by that oil price as well. Thanks for that tip, Rich, about Shell.
Here we go. Whoa, 51.80, up 10%. Reckitt Benckiser on the back of that court case decision yesterday. Incredible. Right, so let's get into
on Reckitt right now.
Wow, it's only been open for 10 seconds.
Yeah, you're seeing like the candles are starting to form that on the minute chart. Yeah, but we are, look at that move. Amazing.
So 51.50. What an incredible recovery. Yeah.
So that is the Reckitt action, people. All of you poised. If you hit that buy button just beforehand, you risk it and you got the biscuit. Right. So what else is moving? Let's have a look at the French market. Winners there, Vivendi, Total, Sanofi, and Legrand. And on the losers list, we've got ST Micro, L'Oreal, AXA, and Edenred and BNP Paribas. Carrying down 0.2% there. What is also key is there might be some caution ahead of that non-farm payrolls number, you know. So we are also waiting for that big jobs number out there.
Yeah, so I'm just trying to find, because we've got two big drops in Reckitt back in March. I'm trying to work out if they were both related. So is this where Reckitt's was before the news came out? 51.60, because there's two big drops. So was this one a profit warning or was that the first court case? Let's find out. So it's the 15th of March and the 28th of February, but that is Reckitt's back to the level roughly where it was before that announcement came on the Friday the 15th of March. Yeah, I remember it being a Friday, actually, so that could well be it. Let's see if we can find that out, because that's just regained everything it had before that sell-off.
And just getting across some of the other headlines, we've had HelloFresh raised to overweight, Morgan Sindall rated new buy at Berenberg, and Optima Health Group also rated new outperform at RBC. UK bosses signalling tepid support for Reeves' high tax budget. Rich had a look at the gilts market and saying that the signals, one should be looking there to see for health warning signals for the UK economy. Crude oil, one that, Rich, you've been trading oil, haven't you? Remaining, let's see where it is right now, because I also like trading oil, and we are seeing oil up 2.5% WTI, and Brent crude also up by 2.3%. So good gains there, and this is lifting a lot of the oil majors, including Total and Shell and BP as well. Speaking of which, just checking on Shell. Thank you very much, Richie Rich. I moved that target and I am now up money an extra 100.
Excellent. So what's your new profit target going to be?
So my new profit target at the moment is around the 2700 handle. I might walk it down later depending on what this chart does.
Great. Okay, so yes, so we've got clarification now that Reckitt has made up everything that it lost on that first the award of the court case of the 60 million, that was this drop here. The one previous to that was a profit warning. So the 28th of February was a profit warning, and this 15th of March was the first time that we heard about this, the 60 million award to the mother of the baby. And now, yeah, you see us back up at the 51.72 level. Reckitt Benckiser up 10.5% on the day.
Right. And whilst you've been doing that, I'm just going to change my limit to the 2. Where are we on Shell? Just to be cautious, I'm putting in risk management strategies. I'm going to put it in at 2632 actually, just so that we are safe on that. 2632, 2632. There we are.
Ooh,
Right.
Not great news from the gilt market. So we have opened down 43 basis points on the long gilt. So further move back down roughly to where we were yesterday. So, excuse me, is that going to weigh on cable again? Ange, what have we got cable trading at here?
So cable at the moment, let's have a look. It is currently, here we are. This is the 1 minute chart. It is tracking slightly higher. However, it is coming off a base. Let's just show you the daily chart there. It is pretty much at the moment flat, but it did have a fall of 0.5% the previous session. So that's a look at cable. Taking a look at the minute chart for you. So there you go. It is tracking higher slightly, but it's still flat, pretty much flat on the day.
Okay,
Session.
now the FTSE 250. Remember, the FTSE 100 is largely distorted by the currency weakness, right? Because 70% of FTSE revenues come from outside the country. Therefore, if you're bringing those revenues and profits back at a lower currency, then they look bigger. Therefore, 70% of the FTSE 100 goes up when the currency goes down. So forget that. Don't look at that with regards to gilts. Look at the FTSE 250. So here we see the FTSE 250 largely tracking that gilt price. You saw us come down yesterday morning, and especially into the afternoon from 1 o'clock yesterday. As gilts went through 94, you saw the FTSE 250 sell off. Now we've had a little rise back up this morning. Are we going to continue to see that that trend in the FTSE 250, or is it going to join gilts going lower? You see the similarity in those two, yeah, identical graphs.
That's a nice swing there.
Well, it's not nice for the UK, is it?
I know, but what I would do is wait a bit more to tell me what the signals show us in terms of direction. Some comments coming through thick and fast from our trader friends out there. British Indian saying the budget message for me is to carry on buying and selling shares. Yeah, well, I'm sure you saw that print on the AIM shares. Trading and never work a PAYE job. It's the only way, British Indian says, to pay as little tax as possible to pay for an ever-expanding state. Also, talking about the British Indian, he's also saying that he's investing his savings built over his 20-year career, which he quit in 2019. Interesting.
And Ben Buswell, you live in paradise. He lives in Queenstown in New Zealand, and he's talking about quitting his job. And you're only about 18 years old, aren't you, Ben? It's my good friend from New Zealand when I was living there. So yeah, I am not letting you quit your job to take up trading, not a chance. Even though you absolutely nailed it yesterday. What was the stock? Go and tell everybody. Was it REIT? Ben had a double bagger yesterday.
Ooh.
He was up 100% in an insurance stock. So yeah, great trade there. But I told him afterwards, stop being such a cowboy.
Cam in the gallery is asking, what's a double bagger?
Double bagger up 100%.
Nice.
So yeah, he put in, the money he put in, he doubled it.
Is it the iShares Global REIT ETF? No.
Turned 30 on Monday. Ben Buswell's birthday on Monday.
Oh.
Early celebrations. Root, not REIT, sorry. Yeah, up 185% it was yesterday.
T?
But he hit his limit up 100. Thanks for letting us all know about that before you went in, Ben.
Ah, Ben. Thanks for sharing. Happy birthday to you ahead of Monday. Hope you have a good weekend celebrating. Right, so it's been quite an exciting morning, but it's going to get more exciting, trader friends, as we count down to that non-farm payroll number. And I have this gut feel that we might, I mean, I know you said we've got the storms, so it's going to be hard to call, but I'm thinking maybe a slightly weaker than expected figure.
I eventually took off my short Tesla yesterday.
Ooh.
Last night. Eventually it got back. The boys in the gallery are laughing because I promised to buy them lunch if I made money on a Tesla trade, remembering I needed to close around 255. It ended up closing my option expiry at 268, which meant I ended up losing, I think, 400, 500 bucks rather than making it. But managed to, I took delivery of the short 100 shares, and thankfully it got down yesterday to a point that I was happy and regained all those losses. So I'm still not buying them lunch.
HelloFresh, we talked about this earlier on. They are up 10.5%.
On an upgrade, a JP
Yes.
Morgan upgrade, and they're up 10.5%. That is incredible.
Look at that. This is the 1 minute chart, trader friends, to show the reaction there. We were just talking about this. I really, as a business model and what they offer, I'm not keen. I have tried it out. I know that producer Fred has as well. Do you use HelloFresh?
I tried it out, and I must admit I quite enjoyed it, but they're a victim of their own success, because I must have got the deliveries for about 4 months, and I simply got all the, you get a card, directions on how to cook the meal and all the ingredients you need and everything. You get that with each pack. So I just put them all together and put them into a cookbook, made myself a cookbook, and now I make those meals myself. So cancelled the HelloFresh and you know, maxed out the discount.
Because I think, yeah, max out discount. That's what Fred did too. What we found was it just wasn't enough substance. I mean, you must need less fuel than I do, but I could eat the whole box myself.
I mean, I've been accused of the similar things from previous ex-girlfriends as well. Just not enough substance. I don't see that as a bad thing.
You are cracking this morning. You should, you know, stay up and wake up early a lot longer. 1st of November here, Richie Rich, or Rich Tea Biscuit. Someone's given you a new moniker.
I like that. It's a horse race name, wasn't it? Tea Biscuit? Sea Biscuit.
Sea
That
Biscuit.
was close. Another couple of trades I did yesterday. So remember, we saw weakness in NVIDIA. And what did we say in yesterday's market measure? As you see weakness, volatility goes up. Therefore, selling puts, you get a double win. Because as NVIDIA was coming down yesterday, the puts got more expensive because vol went higher. The puts got more expensive because the stock was going lower. Therefore, I took advantage. And if you want to have a look on my screen now, I sold 5 of the November $125 puts for 163. And then I sold, it went down a bit more, and that's why you see the mark to market there, 283. Then I sold 10 of the $100 puts for December, taking in 135, or about 1% of where it is now. So those two trades will net me, as long as NVIDIA stays above $125 in November, $100 in December, those will bring me in about £2,000, which will go towards Christmas presents.
Nice.
For myself.
And, you know, funnily enough, the Singles Day, November 11th, is coming up. So, you know, that holiday and that season, it was built by some university students in China, is to pamper yourself, to treat yourself. So there you go.
So November 11th is an official day in China where everybody who's single.
Yeah.
So, right,
So
I
there
already,
you
can
go.
already
You can.
tell Ben's thinking about finishing with his girlfriend on November the 10th then.
Oh,
just for a couple
woo.
of days.
11th, yeah. So all these kids in university thought, you know, we're single. It's okay. We don't have to feel bitter about this. So why don't we invent an event that, you know, rewards us for being single, you know, rather than all these paired up people around us.
I think there is one, isn't it? It's a steak day. Can't remember.
Steak day?
Steak and something else. Right, answers in the comments.
Taking a look at NVIDIA, I think your options strategy sounds about right, because I am looking at, this is the level I was looking at, 140, and it did not break. Can you see it failed to break that? And I kind of think that until it starts to break above 140, we are not going to see another leg up with conviction. We'll talk about that a lot more in the next section. We will answer your questions in Confirm and Send. Welcome back to Confirm and Send, one of our favorite segments in this show where no question is too difficult, too strange, or too weird, but we will get them all answered here.
Monkey Man, I think it must be red wine. Steak and red wine. Was that the day in 15th of March? Right, we've got Andrew McKelvey asking, losing $400 was cheaper exit than buying them lunch. Yes, because I'll never get that lunch money back, and I can always roll options higher and for longer. So that's my excuse there. Now remind us, there was another question higher up from Mr. Haas. There we go. Oil's managed to break its 71 resistance, considering inflation and the cost of living crisis. Wonder how long oil stays in the 70s. It's tricky, isn't it? I didn't see the story from of Iran potentially retaliating. I didn't see that come out yesterday, but maybe we can have a little search and see where that came from. That's what sent oil higher. I'm with you. I thought that we might get a little bit of weakness there because there is a lot of supply, and I think OPEC is also increasing supply in December. So yeah, I certainly wouldn't I wouldn't feel comfortable being long oil here. I am short, but I've got a call structure to kind of cover me there.
And I do think that oil, and speaking to Ben and B. Haas as well on this chat, I'm waiting to see and react the moment we get that non-farm payrolls number, because as you saw with Richie Rich as my glamorous show host earlier in the week, and we looked at, you know, all the three caveats that surround oil, you know, demand, supply, OPEC plus, and also geopolitics. As long as I don't see any oil-related units or refineries being hit, and no increase in hostilities between the two that could endanger that oil supply side of things, and we get this weak non-farm payrolls figure, then oil should come down. That is my theory, rightly or wrongly.
Andrew McKelvey correctly pointing out you can trade pretty much everything with IG, but most of the chat on here on this program is equities. Now that is partially my fault because I am ex-equities, 15 years in Credit Suisse, but I did also trade for a macro fund. So we do a little bit of FX, a little bit of commodities. We do like commodity action. So if you have any views on palladium, which is something that we both are long of, but it was Tuesday, I think, we got hurt quite badly. Wednesday, got hurt quite badly in palladium, but I've got it in my ISA. Yeah, we've got strong views on that. Ange is the gold whisperer. We love a bit of gold, but we don't trade quite as much fixed income, do we?
No, I mean, we can have a look at that. Just pop your questions down for us, and then we'll have a look at that for you. I think I said to Frank quite early on, I'm not keen on fixed income because I like volatility, and also it was also my fault because I used to work on Wall Street. I've spent a lot of time over in the US, and I like tech stocks, so that gives me that that equity, US equity slant as well. But I pretty much trade anything that moves really, that gives me a good conviction, trader friends. And if you see, a theory where you have at least 3 good buy signals, that for me is, something worth taking a look at.
Right, so why don't we get on to the confirmation of the questions there then. Let's see what question 1 holds for us this Friday, November the 1st. Can options get me cheap exposure to a market? Whoa, that's a nice open-ended question, that one. Well, the short answer is it can potentially get you cheap exposure into a trade, but also it can limit your losses, of course, because you'll just be up with the cost of the premium, right? That's if you're buying options. It also allows me to express a view if I don't necessarily want to go long a stock, but I just don't think that it's going to go up anymore. So that's what I really enjoy. I'm much more of an options seller. The guys in Tasty Trade love selling options, whether those are just naked puts, whether they are funded puts, right? So I, at the moment, I've got way too much or lack of equities in my pension. I moved quite a lot of it to cash. Therefore, I'm very happy to sell puts in the NASDAQ. I'm very happy to sell puts in the S&P. I think they are too high, but they never seem to go down. So I do want to buy them maybe 10 to 15% lower. I would move that cash back into equities or into some kind of equity product. But in the meantime, I want to take in that premium as a reward for selling puts.
I think it's fair to say that Tom and Bat mostly like selling puts. They just sell puts day in, day out. And the great thing about this is it can give you additional portfolio income. I kind of like options because, there are times when I look at a stock and I think, wait a minute, this chart just tells me meh. It doesn't give me a buy conviction signal or a sell conviction signal, but it gives me this, I'm just going to meander around this meh area. And with options, you have the ability to have a neutral bias.
Now, talking of that Tasty Trade platform, there you can see my structure at the moment in the spiders. So I've sold, if we want to go, so it's a little bit confusing because the highest strike is at the top. So that is, in S&P 500 terms, 6,150. I am short 1 December 6,150 call. And let me see where the trade price is. I received 232 for that. Okay. Then I put together some downside because as I said, I think the S&P goes lower. With this position, I hope it goes lower. So I decided to buy some low vol puts at the 560. So that spider 5,600 level. So we almost got below 5,700 yesterday, so another 2% lower, and 5,500. So that's all for December. So I sold the call to then use that premium to buy a put vertical. And the put vertical being me buying 3 of these puts over the 2 strikes, and then differing strikes I'm selling again. So I'm receiving premium for selling those strikes as well. So that is my cheap way to express my doubt that the S&P 500 will go any higher. But I don't like shorting futures because every single time this year I've been short S&P or NASDAQ, I think I've ended up losing money on it. So I just wanted to take, I think the total spend was about maybe $1,000, and I just wanted to put that in, and I think I've got about a 10-for-1 payoff there if it comes lower.
Just show me your call level again. Just show me that chart once again.
Yes, 6,150.
Right.
So that was Goldman's target for year end. I thought they were way too optimistic, but if I can sell a call there, then even if it still gets there, then I'm not going to get hurt.
Nice. So I'm just expressing that in these blue lines, so it's easy for our trader friends to have a look. And so on the S&P, ignore the arrows, but those two blue lines is where Rich is positioned. So can you see the 485 level? And also I've drawn that top level there where he is positioned, where his trade is positioned on this S&P 500.
Excellent.
Yeah.
And you can see there we're trading 5,723, so a little bit of a move higher this morning. Just watch your volatility there, because you made good money on that yesterday. It'll be really interesting to see.
Do you think it's going... I just think that as we get closer to November 5th, and producer Fred talked about this earlier as well. I mean, he was saying that 161 million registered voters. Already 65 million have voted. I showed you guys those pictures streaming in from my cousins in the US. They're all voting already, which to me says that the margin is going to get even thinner, even more wafer thin, because, you know, all those people have voted. It just says that they already know who they're going to go for, right?
So we have numbers on it.
40, yes, exactly. 40% have already voted. We don't have the result, but what this tells me is that, you know, it's going to be a really close call. And I just think this might mean that volatility is just going to climb.
We had, is it Polygon that are doing it? Let me see if I can get up the latest betting Trump.
Do share any pictures, trader friends, if you have anyone, any friends, any family already voting in the United States. I'd like to hear about it because, you know, boy, you know, if I had to pick one thing I would like to watch in the US, it'd be the elections and be there to watch the action, because it is crazy.
This site is quite incredible. So you can see here, so it's polymarket.com, and it's just nice, easy, that front page. Look at the volume that is traded in this, $2.9 billion. That is incredible. 61% for Donald Trump to win. Kamala, 39%.
Kamala.
So way different from the polls. The polls are so much closer. And then, of course, Kamala to win the popular vote. Yeah, but incredible how many things you can bet on the Premier League Premiership winner. They've got Man City. That's not going to be popular there, is it?
We've got quite a few Man City and Arsenal. Arsenal's the top one, but there are some Man City as well. Producer Fred is an Arsenal fan.
Well, they've got 25% chance of winning the Premiership this year, Arsenal. Do you believe in that?
Wow. Well,
Man City also the favourite to win the Champions League. And the Chiefs to win the Super Bowl. So, yeah, just an interesting site there, polymarket.com. Vastly different from the polls. Now, why are we talking about that? Because that, of course, is influencing the Bitcoin price. It's influencing the bond markets in the US. It's influencing gold. And gold, took a bit of a hammering yesterday, didn't it?
It did. I have come out of that gold trade. I think I messaged you the other day, and I also told our trader friends, did not punch through 2775 repeatedly. Have you got the gold chart?
8.5 was your level.
Was that 270? Right, yeah. I texted to Richie Rich for two reasons. I'm very much a visual person, as you'll soon see with my charts. And also I texted to him because then I can look at it the next day and go, okay, that was the figure. But gold, a bit of pain. There are lots and lots of buyers this week. Lots and lots of buyers coming in and out of this market this week. And so there was a lot of movement, and it did move slightly lower. This is the daily chart for you. Still, on the longer term view, still on an uptrend. But as you can see there, we got a fall of 1.4% in the previous session.
If you look at my chart there, that's the for this week. And as Anne's rightly pointed out, this level of resistance around 27.87, 88.
There you go.
That was, it tried it 3 times.
Yeah, and it could not get through that level. It just could not get through.
There we go.
And I've got a yellow line on my chart, if you want to see that yellow line, to show you where I was looking. And you can easily do this on the IG platform, trader friends. Don't leave it on white if that doesn't work for you. I like to have it on yellow because that gives me a clear idea of what level I am looking at. Because, and you can see, I also draw very clear reminders for myself, you know, and feel free to take it from this as well. If we break 2785, this was written many days ago, then 2795 is the top of the volley. That was what I was looking for, but as Rich said, I waited for it and waited 3 times or more. It tried to punch through and it didn't. So I took profit off the table.
So you would say if you were swing trading that, that's how you identify your entry and exit?
Yeah, ka-ching, there you go. Let the spread know that Rich
into the next question.
Segue to, hey, there you are. Thank you very much. So yes, this is absolutely right. And it's also good to identify it before you make the trade, right? Lots of people make the mistake, and I've done it when I first started out. You put the trade and then you find all sorts of ways to create reasons as to why that trade should go right. But the key is not to do that and to have your entry and exit point way before you put the trade on, so that when you put the trade on, you have conviction as to where to go if it reaches that level or if it comes off that level and fails to break through, like we saw with gold. Also want to show Ben, this is an early birthday present for you, Ben. There you go. You asked me about Upstart. So here we are, Upstart.
Oh, please don't get him back into that.
He did ask me though, what is the...
Yeah, well, just don't give him a level to get back in, because that's going to be his downfall.
You know, obviously, if you do, if you do trade this, make sure you have your guardrails and make sure you have your take profit and your stops in place. But as I said, I'm a very visual person. Richie Rich is the one to go to if you want to remember like numbers. I'm good at remembering words, but not numbers, so I draw things out because pictures work for me. But here is a setup, okay? So I'm looking at just purely the trend line and price action for good exit and entry points. Rich, I don't know what you think about this, but very often, you know, you get so excited beforehand and you put too many lines overlaying your chart. It becomes like a spaghetti junction. You can't tell head nor tail where this is going. In the end, what I started doing was just taking off a lot of that, leaving volume on, because that's a good indication for me, and just understanding the herd mentality, the greed and fear behind the price action. So with Upstart, I know, Ben, I know nothing about the stock. I'm looking at it from a pure technical point of view. Number one is I'm looking for a bounce with conviction off the yellow upward trend line. Yet again, this is my humble view, not taken from anywhere, but just looking at this chart. And so I've drawn that trend line, which is yellow, and I'm looking for the bounce off this conviction to the upside if there is further upside momentum here. But I've also put that green line because I like things to be visual. And so that green line isn't just plucked out of the air. That's number two, Ben. I have drawn that green line from the top of the high last seen 20th of December 2023, around there. And what I want to see is not just a bounce off the yellow line to the top, but I want to see it punch through that green line with conviction. When I say with conviction, I mean like really punch through, not just a poke ahead above that green line.
And so what level's the green line, sorry?
4932.
4932, right. Benny boy, I am going to, after Ange is done telling you the levels, I'm going to then show you on the Tasty platform an options trade you could do for the numbers, because Upstart numbers I think are the 7th or 8th. So there is an 8th of November expiry in the options market. So Angie's going to give us some levels, and then I'm going to take you through how you put that into an option strategy.
That's a great idea, because I do like guardrails. And here's another guardrail for you, Ben. You then go, well, Ange, where does it go from there? Let's say number 1 came true, number 2 came through. Where do we go from here? So where we go from here is I draw that blue line, which is number 3, And that chart's the last high that we had. Obviously, you don't want to take it to the top because you will have lots of bag holders there. You want to be selling it before we get to that point, right? Because as you can see, if I go back this chart, you can't see an instance where it didn't kind of come back down after that. I would also, just as a precaution, not have my take profit there, but I would take it sort of halfway point just to maintain caution to see whether we punch through that halfway. If we do with conviction, then the blue line is your next target.
So what's the blue line, sorry?
The blue line is 5449. But
Okay,
I
so
wouldn't go that
55
5.
bucks.
I'd go like 5200 because, Ben, look at my face. This is one thing that is also true of human nature. Technicians like... They're laughing at me in the gallery because it's just really scary and funny when she doesn't mean to. Technicians like technicians like round numbers because it's easy to remember, right? So 5200 is a nice, easy to remember number.
Right, now, Benny boy, if you bought the stock at $49, $50, and the numbers are bad, you don't have a chance because in New Zealand you're going to be asleep anyway, and the stock, you wake up and the stock's $40, right? You've obviously lost 10 bucks on the numbers, or 20%. However, if we look at this options market, right, and we're looking at a vertical long call, reminder that a call option is the option but not the necessity to buy the option at that level. So at $50, you would pay $4.90 to buy the right to own the stock at that level come November the 8th. However, that's quite a lot, right? You're paying $5. That's 10% you're having to pay in premium. So we then look at the other level that Ange identified. Let's put you a little bit higher. Let's take you up to 50. It's very annoying that we can't get that on the screen there. There we go. Right, so $4.90 and you're receiving $2.73. If we go to mid prices, you can get a mid price of $2.01. So therefore, your maximum loss here is $2. Remember, you could have lost $10 if you owned the stock and it went down 20%. But your max downside here is $2 and your upside is a profit of $4. So you'll get a 2-to-1 payoff, and there you go. You see your max profit is $400 for every one call option traded, max loss of 201. So that's how you can put a bet on numbers, but your downside is limited. Your downside is $200 per contract.
And just to remind our trader friends too, one lot is 100, right?
One lot's 100 shares, exactly, yeah.
Yeah, so there you go. Right, Producer Fred saying we have time for one more question, maybe two of a quick. Oh, no. Oh, the wine.
The wine one. Now, do I prefer a Pinot Noir
Oh,
or a Syrah
I thought this was a trading question.
with my steak? I am a huge fan. In New Zealand, I remember spending a wonderful evening wine tasting. I can hear the music in the background in Gibson Valley. If anybody knows Gibson Valley, it's about 20 minutes outside Queenstown. Absolute paradise. And you can sleep under the stars by the wine, the grapes.
He doesn't have a hard life, does he? I mean, like...
Paradise. Ben remembers that place well. They also do, a great steak. And then at the end of the night, there's also a nice spa area. I took my girlfriend at the time there.
Oh, so you weren't on your own, pampering yourself?
It wasn't on my own.
You actually had someone there with you.
In the, nice red wine, nice steak, and sleeping under the stars.
Wow.
On that note...
Malbec person, Pinot Noir.
It was, Gibson Valley is famous for the Pinot Noir.
Cool. On that note, we'll see you right after the break.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Hey guys, welcome back. Rich is munching on apple, so welcome back to Trade Expectations, where we take you through the upcoming trades of the day. And there's so much to cover because we've got the non-farm payrolls later today as well.
As well as ISM manufacturing. Don't forget about that as well, because we could get through the non-farm unscathed, and then boom, we've got
whacked.
ISM manufacturing as well. But remember, all the numbers are going to be sorted by the terrible that we saw during the month of. So non-farm could be a funny number.
My gut feel is a weaker than expected number. Currently, just showing you my screen here. You can find this on the IG platform on the economic calendar, which is on the left tab of your screen. You have 113,000 is the forecast. 254K is what we got prior to this. But But as Rich said, the storms might skew things. Producer Fred also made a good point that we had a big jump, and that might skew things in the previous months, and that might play out differently for this number. But it has to be said that the unemployment rate, I expect to stay the same. Also, what will be key will be the average earnings print. 0.3% is the month-on-month print that we're looking at, slightly lower than the previous reading of 0.4%.
Now, Societe Generale, that is one that my old boss at Credit Suisse, Mr. Danny Kaye, would have been livid at me for not trading. Right, look at it now, up 3% today. It was up, where did it finish yesterday? It was up 7% yesterday. So if we look at a 2-day chart of this thing, you saw the numbers come out. You could have bought it at 25.40 yesterday, now at 27.28. So this is a great example of, if you know your stocks, if you're an expert in the French banks, if we had a French producer that knew all about Societe Generale, he could have told us yesterday.
This
was a big positive story, because just look at it. Buyers all day yesterday, clearly, as the market was selling off, this thing rallied another 4%, and this morning you're getting another 3%. My old boss, Danny Kaye, would have been, why are we not in it? Why do we not have more of it? Even if you had a decent position, he says, why don't you have more? Why weren't we bigger?
Well, my guru would say to me, Ange, why didn't you catch that Reckitt upswing? But I remember what she would also say, Now you can catch it on a downswing if you missed it the first time round. So if you whack up my chart, I'll show you rather what I am looking for here. So I'm making a horizontal line and I'm just putting it right at where we started off the day, but also showing you now that it's tapered off a bit where I'm seeing some of the signals. And that line, the blue line 5148, if I continually see 3 times it tries to get above 5148 and fails, then I am going to short this to see it coming back down.
So it's interesting because the way that I would look at it from a psychological point of view is if you had Reckitt's for this decision, right, then you sell it this morning. Right, so a big 10% move, you're there as a seller. As soon as you're cleared, because you've just made 10%, right? You're going to be real happy. As soon as you're cleared out the way, then the stock continues higher, is what I would think, because it's found that level. I don't think there's going to be a large amount of sellers because it's not a negative story. So there's only a limited amount of sellers, and then when they're done, then it goes higher. That's the way I would think from a, not a couple.
Now happy, wanting to come away from the stock and I'm going to take profit off the table. They're signals to others, and that's why you have the second failure to break through. And then others are going to take money off the table again, and then you have a third failure. And when you have the third failure, psychologically to me, that tells me that more people are going to go, well, the party's over now. We need to get out before everyone else does.
That's the thing though, right? The party's just beginning.
Well, I don't know. We'll see.
Right, you've had a 1 hour of a stock that has just received incredibly
is
positive.
this part of your past the 9 o'clock meeting theory?
Yeah, that's so now what we're referring to is the big pension funds, right? First of all, it's a Friday, so you know they're going to stroll into work at 8:15, 8:30.
Coffee in hand.
Coffee in hand. Well, Reckitt's has had a big move. You know, we've got some of those. So shall we have a meeting? They'll then sit down in their morning meeting between 9 and 9:30, and decisions will be made, right, by the Fidelities, by the Scottish Widows, by Standard Life, Aberdeen. What are we going to do with Reckitt's? It was a dangerous proposition before. This court case could have gone on with all the bad press, all the downgrades, all the write-offs. If that fear is now out of the way, do you see new buyers come back to Reckitt's?
That is interesting, and we can look at that at 10 o'clock when we finish, because I have put there a nice big sign, the theory, post 9 o'clock meeting boost or 3 breakthrough failure. So we'll revisit that.
And the Americans as well, of course.
And the Americans, right. Right, back to the trade expectations. So there's that. Also, I am also looking at Shell because we've got Chevron,
1.3.
ExxonMobil, right, coming out later today. Those are the biggies of the week in terms of earnings out of the US. Oil as well. I know lots of oil traders out there. B. Hass loves trading oil, so do I, because there's so much volatility there. But I'm also looking at oil closely because we're now at 2.7% up. Yeah, there we are. So that
it's
brings
taken another leg. Oh,
yeah, another leg. So do I shift my Shell up now because my limit is 2632, and we are now 2613. We have broken past that high, that 2610, but this is the 10-minute chart, trader friends, that you're looking at. You know, do I walk out that limit is the question. Put your comments on the left-hand side.
Yeah, what does Ange do with her Shell position? I'm a bit lost on that. I definitely wouldn't have sold it first thing, but now...
It's now 278 up 278 up. So
The FTSE's also having a decent recovery as well. Let's just have a quick look at that one. So FTSE 100 now 81.50. It did feel it was a little weak yesterday. That's why I bought those call options. If you were watching yesterday's show, that's my calls kick in at the 8,200 level, 8,200. But there's your morning. From the off, you saw buyers come in and the FTSE jumped, 20 points on the open there. So yeah, not paying attention to the worries there on the FTSE 100.
on the minute chart, I'm just looking at some oil now. It is ticking lower. You know, it reached about the 7125 level, and then it bounced off that level, now turning lower. So I'm wondering whether I should take.
You want to take it, don't you?
Yeah, I do. What do you say, guys in the gallery? Take it or leave it?
I think put a stop loss on it.
I do have a stop loss. I always have a stop loss. Is at 263. Oh, at a stop. I see what you mean. Right. So I'm going to put a stop at. That is the 1 minute chart. Bring up the 10-minute. What do you think? Stop at around 2600.
What's that? 10 pence. Yeah. Perfect. Because you were going to sell it there this morning anyway. So.
Okay. Thank you.
Right, let's have a look at those US names. So, of course, big results yesterday from Amazon and Apple last night. How are they doing this morning? Well, we see there Amazon up 5.6% now. Wow, that is fast approaching the $200 level. Boeing we've seen come in just now, sub 153 offered in Boeing with that, the vote on Monday, and Nvidia having a bounce as well. Nvidia up 1.9%. So those puts I sold yesterday hopefully going to give me a bit of a kicker on the.
If you trade oil, the key one has annoyingly changed its name now to. It's not even bigger and changing to the intelligence form.
As good as Series 1 was.
This
So
is the one that you keep saying, oh, that was in a Diplomat. It reminds me of, every time I say this happened to me, you're like, it's in a Diplomat. I'm like, I must never watch this film.
no, that's Billions.
Ah,
Yeah, you got to watch Billions. No, Industry.
Industry.
Yeah, you got to watch Industry as well. You're going to enjoy that. No, The Diplomat, let's hope that's not happened in your life. Unless your husband's got a job you're not telling us about.
not that I know of.
So if he was a spy, would he
It
tell you?
could be me doing the job that he doesn't know about.
You could be undercover in IG, trade live with IG.
But I'm a cutie undercover, right?
Right, quick look at the bond market there. So US Treasuries, look at that, 4.297. We don't like that.
Ooh.
We're going to speak with Axel Rudolph about that after the break, because that is at our worrying level on the US 10-year. UK 10-year at 4.49. And then let's look at the spread between German bonds at 2.41 and the US 10, the UK 10-year at 4.49. So we're 2.07 spread between the two 10 years now. That is concerning. We're going to ask Axel Rudolph after the break how that looks on the charts. We'll see you then.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket. Options. A hugely powerful trading tool with a wide variety of uses. An option is a contract that gives you the right, but not the obligation, to trade a financial market at a set price before a set date in the future. You pay a premium for this right. Options can have daily, weekly, or monthly expiry dates. Say you think the FTSE 100 is going to rise in the next week. Instead of buying the FTSE now, you purchase an option to buy it within the next 7 days. This is known as a call option. It gives you the right to buy the index at a set price called the strike before the option expires. If the FTSE moves above the strike at any point within the 7 days, you can exercise your option and buy for less than the current market price. If the FTSE drops instead, you can leave your option to expire, losing only your premium. But options aren't just used to buy a market when a market goes up. Put options give you the right to sell a market at the strike instead of buying. This can make them a great tool for hedging. Say you own Apple stock and are worried it's about to fall in price. Instead of selling your stock immediately, you purchase an option to sell it with a strike that's close to the current market price. If Apple stock drops, you can exercise your option to sell, preventing losses by selling above the current level of the market. If Apple stock rises, you can keep it in your portfolio, again, only losing the premium. You can also use options to speculate on price movements without ever intending to buy or sell the underlying market. That's because an option premium will change over time, depending on how likely it is the option will become profitable. If you purchase an option with a low premium, you can sell it on if it becomes worth more as it nears expiry. With IG, you can trade an extensive range of call and put options on shares, indices, forex, and more.
Welcome back, everybody. So, as you can see, Axel Rudolph and I have planned to have matching shirts on this morning. Axel, welcome to the show.
Axel, I was really looking at you fondly when during budget, all of us were shouting and trading and making loads of noise on the trading floor, and you were badly typing away.
Yeah, I didn't have any time to trade. I had to cover it for IG because Chris is off, obviously, Chris Reacham. And yeah, it's been an interesting day, and we've seen the aftermath since, haven't we, with the FTSE coming off, etc. But it's actually not that much the FTSE's fault because it just fell with everything else. I mean, before the show, the three of us were discussing the yields when we globally. The 10 and 30 yields relatively high, pressure on the equity market. But we saw similar.
It's a red Thursday. It is Thursday, October 31st, 2024. This is Overtime. I'm your host, Chris Vecchio in New York. Ilya Spivak in San Francisco, Dylan Radigan in Milan to take you through the rest of this half an hour because it's the abridged version for this Thursday. And what a Thursday to have an abridged version. Really shouldn't because markets are spilling over. But perhaps we should because at the bottom of the hour, the prediction trade comes in and there was an 11-point swing in betting markets today from Trump to Harris. Perhaps that's behind the market decline. A little dose of reality here. But it was, of course, the earnings yesterday. Microsoft, Meta, which we thought were pretty good and the market reacted to fairly nicely when we were on Overtime. Ultimately, the guidance was weaker than anticipated. We get off to a bad start today, and it gets worse over the course of the session. More geopolitics overseas. Several people killed from a Hezbollah missile strike into Israel. Iran apparently getting ready for a major retaliation against Israel. So I guess we're back into the thick of geopolitics, Dylan, which sets up one of our favorite trading opportunities that we've come to know and love. But before we get there, of course, remind everyone, if you're watching us on YouTube, join us in the chat. Tell us what you're trading today. And first off, let's just talk about the stocks here. Ilya, you're resident bear. When I'm the resident bull and the markets are going up, Dylan and I go back and forth, super glide this. Oh, you poor bear. So have your moment in the sun here for a quick moment.
It's working today. It's working. I came into this week mostly in NASDAQ put verticals in the queues. But since then, I've also added against any sort of fundamental thinking and really just in the spirit of being ticker agnostic, a bearish bet on the Dow via DIA put verticals, just because the price action said we broke down, bounced, we're at resistance, it's a setup. And that's working. I've also started to put on some shorts in European markets, which broke down. The Eurozone stocks index broke yesterday. I have exposure there via FEZ. EZU actually had really outsized vol yesterday, so structuring the trade there was kind of spotty. But I did it in FEZ instead, and the vol profile was different, and that works today. So needless to say, this has been a pretty good day for being short. I think the biggest question now is continuity, because you haven't really crossed any red lines, especially in the S&P. You have taken out the interior of the range and support there, what, about 5,800 or so? Let's call it
5830.
Yeah, something like that. But this is the big test, right? Where you have that 100% fib level. This is it. This is the big base to the whole thing. Now that you've set a lower low after a series of higher highs and higher lows should be cause for pause, I think. But you could bounce here nevertheless and get a better risk reward to structuring a bigger short bet. So I'm not doing anything extra here. I'm sitting with the exposure that I have, and I'm saying, okay, if this is real, great. It'll break down. I think what you said with the comment on predicted is an interesting bit that I've been thinking about more and more, thinking that we are almost guaranteed a contested outcome if Harris wins. And actually, the more decisively she wins, the more contested the outcome might be, given where the polls are and given where Polymarket is and predicted still is. And so with a Harris win, which to me is probabilistically a coin toss and based on what I think actually likelier than anticipated, then you might end up with a negative response for stocks because you have uncertainty, not because it's Harris or Trump or because the markets care about the outcome, just because you have almost guaranteed uncertainty for a period of X weeks. On top of that, you might actually get yields higher because uncertainty about who will take the reins might end up sending money out of bonds on some sort of a sovereign level spook. Now, it wouldn't be a lasting thing. The U.S. is not a sovereign risk, and anybody who would argue otherwise is just delusional, in my opinion. But a bit of sovereign risk as a reaction to an event, to a headline for a period of days or weeks, that's certainly within the
Well, I mean,
realm.
at this point, Ellie, don't you think so? True, forget what reality is, because obviously we're a week, less than a week from the election. Reality is irrelevant. In the non-reality of the 5 days between now and the election, a Trump victory or a Republican victory is seen as less regulatory, lower tax, knee-jerk stock positive.
That's once you start to factor in policy.
And Harris
directives.
is more regulatory, more tax, knee-jerk stock negative.
more spending. So
Yeah.
both fiscally,
But I would say both are
fiscally
spending. I mean, I guess the question is the optics. I guess what I'm getting at is I felt like today was like a Harris positive day on vibes, on polls, on like
For sure.
heading markets, whatever.
Sure.
And
And
stocks
I don't
got
know whether it's and it was a bad stock day because you're like, oh, more regulatory,
So this is what I
more
mean.
tax. I don't know.
I think you're
Obviously-
getting exactly at what I'm saying. That before you get to policy differences, which aren't even that significant when you talk about the reality of budgets, and that's what markets care about, rates and budgets, first and foremost, before you get to any of those things, on Tuesday, you will get, let's say, a commanding Harris outcome or a commanding Trump outcome. Let's envision that possibility, okay? If it's Trump, is there any doubt that Harris will concede? No, not really. If it's Harris, especially by a wider than expected margin, is there any doubt that Trump won't concede? And so the higher uncertainty scenario is if Harris wins. Before policy, before anything else, just episodically after the election.
Well, Ilya, you mentioned that there's cause for pause down here, which, by the way, if Overtime ever starts a pet charity, that will be the name. Amazon
right.
here
That's
after hours is up at 193. Apple has yet to release so far. Tom was covering this just at the tail end of last call, which we weren't invited into for the second day in a row. Amazon is now at 193.80 here. They produce higher than expected revenues and earnings per share. Earnings per share, 143 versus $1.14 expected, and that's obviously $1.43. Revenues 158.88 billion versus 157.2 billion. So the stock's up around 6% here after hours. We'll be waiting for Apple in, roughly speaking, 15 minutes time. So we should keep an eye out for that as well. Is it helping the S&P and the NASDAQ is the better question? Not really. 5738.5 was the close on ESZ4. We're at 5743.75 here. Guys, because this is the abridged version of Overtime, we're going to keep scooting through. In terms of sector performance today, when you see this kind of red on your screen, I don't think it's a surprise that most of the sectors that we track, of the 25, 21 were in the red. Ugh. Semiconductors, the big one, down 3.59%. It feels like the narrative's under pressure here, Dylan, the past 2 days. If it's the GLP-1 drug or AI, two of the pillars of the super glide are taking it on the chin. So tell me, my friend, why should we still believe, despite all the noise and nastiness that's going around?
Look at Amazon. Look at because the real work is done by the real men and women among us. And the real men and women among us are at Amazon, they're at Meta, they're at Google. I mean this in the metaphorical sense of the powering of the superglide. A little GLP-1 litigation. If anything, I know people that are trying to get onto Ozempic so they can get a piece of the action on the class action distribution downstream. And so, I don't consider. I think that that's all well and good. I don't consider that the part of the superglide. The superglide is on the efficiencies of technology, distribution, logistics, communication, the load factors on the diminished number of empty hours at the ports, the diminished numbers of empty hours in the trucks. The longer duration of the functionality of all the mechanical components by virtue of tuning and all the rest of it. None of that's unchanged. I mean, if there's anything, you could argue that accounting issue with the big NVIDIA customer,
SMCI,
that's SMCI. That is a reason for potential. That's not a reason for concern about the superglide right now. However, you could look back if this does go sideways, meaning in order for this to go sideways, you would need the demand for NVIDIA chips to be fraudulently overrepresented at this time by virtue of SMCI, which is the sort of unspoken but implied sort of adjacency, because it's, this is one of their biggest customers and what's their accounting. which would ultimately go to what Ilya always says, which is a truism, which is that in any new industrial revolution of anything, there's an overbuild, overinvestment, excess, et cetera, et cetera, et cetera. Railroads, internet, AI is going to be the same thing. I would say in addition to that truism, there's also going to be some famous frauds along the way.
There always seem to be.
It's the same way with the, I mean, there wasn't a fake railroad, but you get the point. And so,
there was so much fraud with the railroads. My God.
Sure. But there was an actual railroad at the end of it.
Yeah.
Right. Okay.
Read the profile of.
Wait, are you saying there's going to be no AI
by Ron Chernow? My God.
Dylan, that's
so anyway,
the
super glide lives, and I would
Oz.
point you to Amazon's earnings more than I would point you to a GLP class action or a SMCI accounting issue. Although the SMCI accounting issue does have, I would sleep with one eye open on that one. That's all. But look at Amazon. Look at Amazon. What's your problem, man? You're breaking my balls. The super glide lives.
Here's the bull case on Amazon. People are buying less junk food because of the GLP-1 drugs, so they have more money to inject into the economy as opposed to into their stomachs. But Dylan, like, I got to say, people who are saying they want to get on Ozempic to join the class action, it's like saying, like, I started smoking Juul so I could get on the lawsuit against Atria.
I mean, listen, it's a bad joke.
I started using asbestos as insulation.
Marlboro Reds so that I could get in on the. Yes, my whole house is asbestos. It's going to be a bonanza.
Just to get in on the class action.
Listen, The Economist was just writing up 2 weeks ago that one of the interesting things with GLP-1s, which it's saying the praises of them up and down, but said food companies don't like it because they see it as a threat to food consumption.
So speaking of those GLP-1s, there was the Eli Lilly earnings yesterday. There's a great follow, by the way, on Twitter, which is The Transcript, and they point out interesting snippets of some of these commentaries that are made. Mm-hmm. He talks about this lawsuit, and he says here, and we should go to the Eli Lilly share price LOY here on our charts. Let's go back to you. David Rick says, there's a stay, et cetera, in the court, but we think that should be the state there. As it relates to semaglutide, you have to ask Novo Nordisk that although we're working hard to help Novo with their supply problem by reducing demand for semaglutide and increasing a purchasing appetite. So maybe it will resolve that way. Basically, the Eli Lilly CEO is coming out and saying like, oh yeah, we see that their issue is that they can't address the market. There's so much demand for this. And instead of dealing with that because they keep pushing up prices, we're just going to make more of this stuff. We're going to flood the market with it, and we're going to undercut them on prices. So the guidance forward wasn't great because their two particular drugs haven't sold as great as perhaps in volume terms that people were expecting, not to the Wegovy levels or Ozempic levels that we've seen. But as far as Eli Lilly is concerned, they're saying that this demand story is off the charts. And that's why, unless there is legitimate accounting fraud with NVIDIA as well, which SMCI is 11% of their revenues, is this a short-term pullback? Probably 4.72% lower. Is today the day to jump in? No. So much of this feels like it is related to what we're going to be talking about over the next half an hour, which is betting market. So I don't want to go too deep into that conversation.
But can I bring this up while it's just the three of us? Because is Harris bad for the stock market short term?
No.
Today's behavior would suggest yes.
Today's behavior tells me a lot of people have placed leverage bets on a particular outcome, and they think that outcome is less likely. So there's a lot of proxy bets that are being lifted as well. There was an article in the Financial Times, or maybe it was on Bloomberg Radio yesterday, where I heard it and didn't read it. Forgive me for the lack of clarity on this, but I swear this actually happened. A reporter was noting that they were at some Greenwich hedge fund investing conference over the weekend, and they did a straw poll of like, who do you think is going to win the election? And resounding the answer was Trump. But when asked, why do you think Trump is going to win, most people off the record said it's because of the betting markets. So if the betting markets come in by 11% today, and you've been saying, oh, well, like the betting markets are going up, and so that means TCJA gets extended. Okay, so I'm obviously not going to do any tax loss selling this year, because why would I sell any loser stocks in an environment where tax rates are going to be higher than when I could sell them in a year from now? All of a sudden, you see these odds coming back in, you may be changing your priorities if you've had trades predicated around this theme. And I know there's some people out there who have sent some very terse emails to Sosnoff about whether or not this theme is even legitimate, Ilya. I know that you and I have talked about this. Quite funny.
Yes.
But like just reading the tea leaves here, we've seen over the past month, it was weaker treasuries, it was stronger stocks, it was a stronger dollar. It was the quintessential 2016 reaction all over again, just playing out ahead of November 5th, as opposed to on the other side of it this time. So, in terms of the vibes, I got to say, there's really two different things that I'm watching here. Within every political party, there's like two camps of people, right? There are the drunk party enthusiasts who just lap up every little piece of propaganda that's put out there, and they spew it out. If their candidate says the economy's great, the economy's great. If their candidate says the economy's crap, the economy's crap. And then there are sober-minded party enthusiasts. And there's a difference. People who are saying, I want this candidate to win, but X, Y, Z, these are the polls, these are the facts on the ground, these are the conditions, and so I may hope this candidate wins. This is what I think is going to happen based on what I'm seeing in the data. Because data leads to good takes, right? Bad takes lead to data analysis leads to good takes. Good takes leads to overconfidence leads to bad takes, which leads you back into data analysis. So what do we see here? The sober people that I'm watching in the Republican Party that are on the ground in Pennsylvania and observers of it are very concerned about what's happening there. The female turnout is much higher than it was in 2020 or 2016 for first-time female voters. It's much higher than was modeled out. People like Mike Cernovich, he was famous in the 2016 cycle. He said that Pennsylvania, he's very alarmed about it if you look at his recent tweets. So maybe there is a sobering up here now, guys, in the final stretch here. It's less than a week until the election.
You're saying the drunk Trumpers are sobering up, that's the community that was the most sort of maniacal because of the betting markets, because of Trump's sort of internet charisma, because of Elon. And you're saying that that's a little, that then there's like I got you.
And perhaps, I mean, I think it was always clear that this was going to be close to a toss-up, and the
it's the same
markets
thing.
Look to be offsides. But
when Kamala was at 60%, we were even saying like,
we were like this is going to be a toss-up beforehand.
This is a toss-up race. This is fade
right.
either candidate at 60%.
But the reaction today, I think, goes exactly to the point. It's not that electing this one or that one is good or bad for stocks per se before you even get to a conversation about policy, because both of them are supportive for stocks. You can make the argument on this policy, but terrible for stocks on that policy. And it's difficult to say, they're going to care about this one more than that one. Who knows? But what you can say, I think, is before any of those considerations come into the conversation at all, if Trump doesn't have a commanding lead in the minds of the market, that means uncertainty after the outcome.
Yes.
No, I like
because
your
what we
logic,
know is
basically,
he contests things.
Yeah, and that the market also sort of became too certain of a Trump victory because it was interpreting
right,
everything you just said. The interesting thing, I mean, we'll see what happens next Tuesday, but I do also think there's a large, the same way there are a bunch of people in 2016 that would not publicly admit or speak about voting for Trump, even though when it was between them and the ballot box, that's what they did. I actually think that phenomenon it plays to Harris's benefit.
Yes,
I think, like, you talk about that straw poll.
I agree.
I bet you if I went around that Greenwich straw poll and they're like, who's going to win? Everybody says Trump. And then you went around one-on-one, a Beretta to your head. Who are you voting for right now?
A different kind of thing.
Not in Deep Blue, New York. Basically, every single one of my neighbors has a Harris Walt sign out in front of their house at this point in time.
But I'm saying in the Arizonas, in the Pennsylvanias, in the North Carolinas, for sure. I think there's a higher. I don't know what's going to happen. Obviously, who the hell knows what's going to happen? But there's a higher probability of ghost Harris votes, a la Trump 2016, more so than there's any probability of undisclosed Trump votes, because I actually think the data collectors have, if anything, over-rotated the mechanism of their polling data to overcorrect for what happened in 2016, excuse me, to overcount Trump effectively. So if anything,
And this
Wait,
sort of goes to the heart of my psychology theory.
We've got to get moving after this comment because we have literally 3 minutes left.
Right, fine.
Last
We
word
didn't
on
even
this,
talk
Ilya.
about oil.
The only
the
thing,
bond.
yeah, I mean, the only thing there is his vote as a known quantity is what it is. Hers, who knows? So there's surprise risk.
Oil prices today jumped higher. We see headlines out of Israel that a Hezbollah missile kills 7 people or so. That may not be fully confirmed as the casualty numbers are still coming in. And then Iran floats a headline that they are getting ready for a, quote, major retaliation, unquote, against Israel, which if Iran retaliates again, then Israel may say, sorry, we're going to have to take out the oil infrastructure, right? So oil is starting to price in a little bit more of that geopolitical risk that looked like it was gone after last weekend. Yeah. IVRs are bouncing back. The IVR low on the 24th was 27.52. We're now back up to 64.7 here. So Dylan, this is your wheelhouse.
Not yet. It's going to get hotter. This one, I love it. We talked about this yesterday. Don't worry, because you got to get the president. You got a new American president. Like I'm going to sound like a broken record. Wait for the new American president. It's going to get more crazy. Next topic, speed round, 2 minutes. Let's go.
Bonds bottoming. Are they? Are they not? ZB tries to make its way back into positive territory. Guys, for all of the angst here in the bond market, because it feels like it's been pulling on my heartstrings as well as my P&L the past few days, we really are not that far off from where we were literally opening a week ago. On the 24th, we opened at 118 and 1 tick. We're at 117 and 31 right now. If you're on the buy side, it's 118 flat. So it's been a lot of two-way action, not a lot of distance. So Ilya, close us out here. Non-farm payrolls tomorrow morning. It is not expected to be a good report, in part because it is a report that's going to be influenced by the Helene and Milton hurricanes. 113K is the expectation. And the strikes with Boeing. 113K is the expectation. That's a dramatic markdown from where we were previously, but it's above the break-even rate that's required to keep the unemployment rate in check at 4.1%. Do we care about non-farm payrolls tomorrow, or are we already looking through that? Their earnings are mattering more, or is it all about the politics?
If we get a number that's basically in line with expectations, I think markets are basically already primed for that because of the hurricanes, because of the strikes at Boeing, the hotels in California and Hawaii, all of that. So you probably have markets expecting weakness, but that's not a given. You could surprise higher. ADP, for all its warts, surprised higher. The PMIs showed that employment was better in October than in August or September. U.S. economic data has been tending to surprise higher. Initial jobless claims have pulled away off the highs, sort of diluting that influence. If you get a surprise higher, I think the bonds might actually crack down and yields go up because you lose more Fed rate cut expectations, and also because, to add the political overlay, it jives. If the race is getting rebalanced in the minds of the markets, and a Harris win starts looking like a clear chance relatively, and that means post-election uncertainty is relatively likelier, all the more reason why yields would go up.
Well, with that, overtime is out of time for this Thursday, October 31st, 2024. We'll be back on Monday, same time, same place as always here on Tasty Live, Monday through Thursdays, 4 p.m. Eastern, 3 Central, right after last call. For Ilya Spivak in San Francisco and Dylan Radigan, I've been Chris Vecchio. Be sure to stick around, though. After a brief break, Jeff Joseph is going to join me. We're talking the prediction market and this big swing in odds over the past 24 hours. And then after that, Ilya's back with Macro Money. So stay tuned. See you on the other side.
See you there, folks.
This is the prediction trade. I'm your host, Chris Vecchio, joined by my co-host, Jeff Joseph, as we take you through the latest contours in the betting markets. And what a day to have an episode, Mr. Joseph. We've seen some wild swings here as we approach November 5th.
Yeah, we're getting down to the wire, and we're not surprised. We've been talking about an inevitable regression back to the mean, to a closer race. I mean, there's been a disconnect in that the prediction market prices on both Kalshi and Poly Market and Predictit have not been representative of the polling numbers we're seeing out of Nate Silver, 538, and Real Clear Politics. So when everyone's polling a 50-50 dead heat, essentially, with a 2 or 3% variance in either direction, you certainly couldn't justify the 65-35 or 60-40 spread we were seeing on Poly Market and Kalshi. And I think those markets are starting to correct and come back to a more sensible representation of what the polling indicates.
Well, the polling has remained quite tight here in recent days. According to Nate Silver's latest betting model, when he pulls together all the odds, we're looking at a 48.5% polling average for Harris versus 47.4% for Trump. In previous episodes, we've discussed how any Democrat at the national level needs to effectively have a 2.5% favorability there in terms of that spread in order to be considered the favorite for the election. So while we're within that narrow margin right now, the market is judging that Trump may be the odds-on favorite. But that came crashing in today. We talk about the recursion trade, Jeff, and you and I have been long advocates of when either candidate gets to 60%, look to fade the move. Trump overshot that. He got up to 66, 67% on some platforms. And now we're seeing here today, it is a dramatic reversion to the mean. So let's just dig into that a little bit. Is this a function of how the betting market is structured? Is this just a dose of reality where people are looking at the polls in the final days and saying, you know what? This really isn't a race where he's a 2 and 3 favorite. It really is 50-50, and I should place my bets accordingly.
Well, you could probably look to sports wagering for some indication as to what that answer might be. And that is invariably, as much as the House tries to correct the imbalance and tries to get a equal offset so that the VIG is the only thing in question, it doesn't always happen that way. And sometimes the gambling house and sports wagering is at risk to a certain outcome. They try to mitigate that by shifting their lines and trying to get a 50-50 balance between the wagers, but it just doesn't always happen that way. And meanwhile, the players on the field aren't listening either. So I'm not the least bit surprised that we're seeing a disconnect between the betting markets and the polling markets. But again, we're also not surprised to see them come back and regress to where they should be. So I think, listen, it's well noted, it's a tight race right now. That's no surprise to anybody. And I think the more astute prediction market wagerer right now is looking for those distinct pockets of opportunity. And toward that, in today's issue of Luckbox, it comes out every Thursday. It's free. Subscribe at getluckbox.com. Today we shared some polling results, and you were unavailable, so I wasn't able to include you, but we did a quick snap poll. We called Mark Cuban and Dylan Radigan, who was just on with you a moment ago. Scott Supak. Scott's a super trader by prediction market standards. He's a professional prediction market trader. He's been doing it for 10 years. His focus is politics and the climate markets. And he works with a consortium. It's a group of 5 investors, one of them coming from a hedge fund, that pull their money together in the prediction markets. And so I talked to Scott, Mark Cuban, Dylan Radigan, and Robert Cahaley, who was with us only a couple of weeks ago on the prediction trade. And we asked them for their best bets and actually kind of put a metaphorical gun to their head and said, you may not want to make a call in some of these races, but make them. So if you don't mind, I'd love to share the results with you because you weren't able to make it.
Well, you know what? This is actually, kids, learn to read, right? I see an email from Jeff yesterday morning when I get onto my computer for the first time, and it says, please send this in by noon tomorrow. But Jeff sent it the night before. So reading comprehension is very important. Jeff, why don't you read this? Because clearly I don't know how to.
Well, I'll be brief, but so the first question was, what swing states do you have a high degree of confidence? And we calibrated that at over 65% level of confidence. So what swing states do you have a high degree of confidence that Harris is likely to win? Cahaley, Republican pollster, Mark Cuban, Democratic surrogate, Jeff Joseph, and Scott Supak, this extraordinary trader, prediction market trader, all chose Wisconsin as a likely winning state for Harris. Cuban, Joseph, and Supak also chose Michigan, and Cuban and Supak chose Pennsylvania. So Mark Cuban, not so surprising, he is a surrogate, but he's also looking at internal polling that we're not saying. And Scott Supak all chose the blue wall going for Harris, which of course would probably result in a Harris victory. So that was worth noting. To finish that, Cuban actually only gave one state to Trump, and that was Georgia. And as far as Trump goes, Cahaley, Cuban, and myself chose Georgia. I have a wager. I am long GOP for Georgia. I am long Wisconsin for Harris, as well as Supak is. We disclosed where they actually had wagers. Cuban wasn't wagering or disclosing any wagers. And Michigan, I'm long Harris in Michigan, along with Scott Supak. So that was kind of the interesting takeaway. And since one of the things we talked about for this segment, being the second to last we have before Election Day, was that we would share some of our bets. So those are some markets I'm currently long. I'm long Harris in Michigan and Wisconsin. I'm long Trump in Georgia and Arizona are the two markets I'm long Trump in. Cahaley gave North Carolina to Trump. The next question was moving on to what party do you believe will win the House? Myself, Dylan Radigan, and Scott Supak, who has a bet on this outcome, chose the Democrats to win the House. Cahaley chose the Republicans. Mark Cuban said he didn't have a strong feeling on that. Who do you believe will win the popular vote for president? Cuban, myself, Radigan, and Supak all chose Harris, and Supak disclosed that he has a wager on Harris to win the popular vote, and Cahaley chose Trump. In the final polling question was, which candidate do you believe will win the Electoral College and consequently the presidency? Cuban, Radigan, and Supak disclosed Harris as their choice. Radigan and Supak disclosing that they have a wager to that effect. And myself and Cahaley chose Trump, and I disclosed that I do not have a wager on Trump to win the Electoral College. So that's the result of our polling. It's on the website at luckboxmagazine.com. It's not really a poll. Again, we were asking them to make forecasts here, so we thought we would share that with the readers today.
It's a great crowd of people to draw from. Obviously, different views on how the world works, different views on how politics work. So the fact that there are areas of agreement, I think, should be worth noting. And the way that these betting markets have shifted, Jeff, in the past 24 hours, you've caught quite the tailwind here for yourself in many of these places. Wisconsin, for example, polling at 60% for Trump yesterday. That's now down to 52%. That's a 16-point swing in less than 24 hours. We head over to Michigan as well, which as of this time, 2 days ago, Trump had a 7-point lead. And now we're looking at Harris up by about 8 points herself. So we can watch and see on how all these individual swing state levels, bettors are coming in and saying, you know what, there's some good value on the board here. This race is probably going to be closer than what maybe we've been led to believe because the polls have not broken. Jeff, you and I have discussed in recent weeks how when we look to political betting markets, they're a good way to check sentiment in real time. Are they better than polls? Are they not better than polls? That's a different story. That's a methodology question, right? It's a different view on how the situation is playing out. We look to betting markets sometimes as they go to anticipate the vibe shift, for lack of a better phrase. And so when the polls started to narrow at the end of September, beginning of October, the betting markets kind of took off. And I think they took off in the anticipation of the polls then validating that reality. But the reality of the situation is that has not happened. The polls have remained tight. And no matter where you look, basically everything's in the margin of error.
Well, that's pretty true. And when you look at this divergence that we noted earlier with Trump trading at a 65% probability, when the polls suggested more of a 50-50 toss-up, the neophyte wagerer that applies maybe poker principles of money management and betting calibration to the prediction markets might say, here's an EV play. The polls are telling us it's a 50-50 race and I can buy Harris for 35%. But there's a fallacy there. You know, I mean, in probability theory, the expected value is it's a random variable, right? It's weighted by the probability of certain outcomes, but what it requires is frequency. And if you don't have frequency to make up the difference, you have to throw out EV as a betting technique. So you can't say there's this big divergence, I can buy Harris for 35 cents, but she's really a 50% probability on the outcome, which means if I took this bet 100 times, I'm going to win it 50 times. So why wouldn't I buy it at 35? Well, you're not going to get this bet 100 times. You're going to get it once every 4 years. And quite frankly, you'll never get this wager again. So you have to throw expected value out the window. And I think that's something that a lot of wagers who take maybe poker principles or other gambling principles and bring it to elections might not be thinking about. It just doesn't apply. It doesn't work.
You and I have talked previously about how betting markets, even if they're not a de facto reflection of public sentiment, we clearly see myriad individuals point to them as a way to gauge how we're feeling in real time. There's been a number of people recently who have pointed out that it appears that there are a few whales that have been pushing around the betting markets that have perhaps exaggerated the odds in Trump's favor, which from then a betting perspective, it means that you're getting good value on the Harris side of the ticket. One such person, of course, is someone that you've interviewed here, a guy who goes by the name of Domer, a political betting professional who's been in the betting market since 2007. Jeff, he points out that in the market right now in Polymarket, where there are 38,038 unique traders, where 161,689,957 total shares have been traded, there is one wallet, which he's dubbed the Trump whale, which controls 29.1% of all the trades in this market right now.
Yeah,
Do you think
182 million shares assigned to those 5 accounts? That's right.
Which is incredible, right? Because the divergence here, just for a factor, just as a point of reference, the top 3 account holders on Polymarket for Trump, 29.1% of outstanding shares. The second, 8.2. The third, 7.6. On the Harris side of the table, the top 3 shareholders, one has 4.4%, another has 4.2, another has 3.8. So there is a certain concentration here on the Trump side of the trade that may or may not be pushing things around. What's your take on the situation? If there is a whale here that's, I don't want to say manipulating because that's not the right word, but when you have that much heft, you can push prices.
Sure.
So let's say, is there a whale here pushing prices around? Does that make this even more appealing, knowing that this really may not be a consensus view? It's really one person's view.
Well, manipulating isn't the word, as you and I have discussed, because it's distorting the price action. But he's not manipulating it because he would be manipulating it in his favor because he's accumulating more shares at a higher price. So that's not in his best interest. It's pretty clear that there are some very large whales that are betting. Domo's quite a whale himself. He's a large wagerer, but not at that scale. All that means that's the other side of that expected value argument that I just laid forth, that you can't say, well, it's an EV play because it isn't, but you can say that there's been a price distortion because of large outside bets, that you no longer have a Gaussian distribution in terms of what the mean is in terms of the wagering, and you have to buy expecting a regression back to the mean, and that's exactly, again, what we've seen. I think one of the things worth talking about, though, is where, what the super traders are doing. It's a community I know. We started the prediction trade 4 years ago, before the court ruling that allowed Kalshi to get in the game. when Predictit was the only game in town for the most part. And I think I should mention this because a lot of people are flocking to prediction markets right now because it's fun. It's not the show. It's not like stepping up to the major leagues to trade options or trade in the market, but it's fun. It's recreational in the same way that, sports wagering might be. And there are legitimate hedging purposes. But when we talk about these markets, of course, Polymarket's not accessible because it's offshore and it's crypto blockchain based. Predictit is accessible, but now that Kalshi exists, it's worth noting for our listeners that it's just not a good market to trade in. First of all, it looks like they're on their way out. They probably won't have much legs ahead of them. They haven't added any markets in months, whereas the moment Kalshi won their appellate court ruling, within hours, they added dozens of markets. And there's also a huge fee differential. We traded on Predictit because it was the only place we could trade, but there's an $850 cap on any one contract. And there's also a 5% withdrawal fee every time you take money out of Predictit. Kalshi doesn't have those fees. There's no withdrawal fee other than a nominal charge. I think it's literally something like $2 when you withdraw money. But if you're withdrawing $10,000, paying a 5% fee is prohibitive for any type of trader. So Kalshi has certainly been the recipient of a wave of influx of capital, and for good reason. I wouldn't advocate Predictit as a market for any of our listeners because the fees are just too oppressive.
Suppose that's a good time to mention that we'll be talking with both the CEOs of Predictit and Kalshi on Tuesday night, election night. Here on Tasty Live, we're going to be doing the Tasty Live election on special. Both John Phillips and Tariq Mansour will be joining us for conversation, so be sure to tune in. That's 7 p.m. Eastern, 6 Central Time, Tuesday, November 5th on tastylive.com, of course, on the Tasty Live YouTube page as well. But let's redirect this conversation, Jeff, back into the final few days here. This is now no longer a market where you're treating it like a leap for those options traders out there. This is quickly becoming an option with a high degree of convexity. We are approaching expiration date, if you will. Now, many of these polls, many of these bets don't necessarily settle until there is a finalized set of numbers. For example, who wins the race, the condition may be until all three networks call the race in agreement, right? But for on these individual state levels, we're going to see the numbers come out over the course of the day. So first things first, Jeff, let's talk about this from the novice trader's perspective. Should novice betting market traders be paying any attention to any of the exit polls that they see, any of the information that comes out before any actual voting booth closes on Tuesday, November 5th?
Absolutely. And that's a great question. So there is a whole, as I said, there's an ecosystem of prediction market traders. And there's one of the things they do look at is exit polling. Exit polling is particularly valuable on election day because you have certain demographics that do early voting. And of course, as of right now, 59.8 million mail-in and early person votes have been cast nationally out of 62.9 million that were requested. So we're getting a really strong early turnout. But the day exit polling on election day is always considered materially more valuable. And there'll be a lot of people watching. Steve Kornacki on the board making quick trading decisions. I'll be one of them on election night when I'm not watching the election special that you'll be on. And so those are some of the tools to keep in mind. I'll share something else with you. And I don't mind sharing that this is also coming from Scott Supak as well, who I mentioned is a super trader. One of the things that is very important is to catch a wave before it goes. The markets are liquid and there's a lot of trading that goes on election night. And one of the best indicators are looking for bellwether counties, particularly in the central time zone where there's early voting occurred. And Supak shared with me the counties that are on his short list, so I don't mind sharing them with readers. Now, this is getting in the weeds, but I'll just share it with you specifically. In Kentucky, he'll be looking at Boone, Kenton, Campbell, and Boyle counties. They are bellwether counties. If all of these shift to the left from 2020, it'll be very good for Harris. If they hold the same position, it leans towards Trump. And if they shift toward Trump, it really implies that these counties are going to indicate a Trump victory. So there are 4 counties in Kentucky that are going to be very closely watched. In Indiana, those 2 counties are Floyd and Clark County. They're in the southeast part of the state, around the Louisville metro area. So those 2 counties are going to be watched very closely by active prediction market traders. So that's something to keep in mind. Tools and resources, Decision Desk HQ is something that everybody will have open on their laptop, and everyone will be watching the needle move, the needle on the New York Times website, which is also very helpful as well. So those
helpful.
are some
That's why
of the
I'm
tools.
on statins, Jeff.
Yeah. I'm sorry?
So that's why my blood pressure is so high, because of that damn needle.
It's true. And another thing that's being watched too, and let's try to sort through some of the signal and noise. It's some of what we were doing in today's Luckbox letter that went out. The registration numbers, and you and I had an interesting offline conversation, and I have to agree with your conclusion that too much is being read into as favorable signals for the Trump campaign about the early voting data. And go ahead and say more about that, because I agreed with your premise on that.
Sure. So, I've seen a lot of people making hay of the fact that the Republican early voting numbers are up compared to Democrats, especially relative to 2020. And Elon Musk, of course, the owner of X, has been touting this a lot because he has a PAC that is supporting Trump. And it looks like that Elon Musk PAC is doing most of the get out of the vote work, which is another story for another time, probably not for a podcast of this ilk. But the point is that there's been a larger number of Republicans who are voting early. So turnout compared to 2020 for Republicans is much higher. I don't know if that's something that we really should be reading into, because 2020 was a really unique year. Democrats were all voting early. They were all voting absentee. They were voting early in person when it was available, because that's what the party was saying. Get it done, socially distance, avoid the long lines, avoid contact if possible. Whereas if people remember 2020, I do, Trump was telling people not to vote by mail, that it could be rife with fraud. Don't go vote early. Election day voting only. Go vote on election day. And you heard the whole ecosphere. How come every other country can just vote on a single day and we have to do it over the span of months? So now you have a situation where that's not the GOP platform position at all. They actually have been pushing people to vote early, to vote absentee, to do everything. You haven't heard Trump say anything to the degree that he was saying in 2020 about mail fraud. He's been actively encouraging it. But Democrats, on the other hand, not necessarily scared of getting COVID, not worried about social distancing. So I'm not looking at the comps compared to 2020. I'm looking at the comps compared to 2016. How is Republican turnout now in early voting compared to 2016? How is Democratic turnout now compared to 2016? And the answers are not really that different. Republicans are like 4 to 5% higher than they were in 2016. Democrats are about 3.5, 4. So the GOP does have an edge, but I don't think it's as large as it's been purported to be, which makes me think, again, the 65% chance of Trump winning is being overstated and being pumped up by, friendly actors, by surrogates.
Well, that's clearly the case. Let's call this a dead heat, because it is. It's going to come down to Pennsylvania, like we said quite some time ago. But on the early voting numbers, there is some good news for the Democrats. I've been sifting through those numbers carefully. And one of the things worth noting is something I noted today. Of those 59.8 million votes that have come in already nationally, 54% of them are from women, 44% from men. And considering the gender gap that's apparent in this election, I think that's really good news for the Democratic Party. That's good news for Harris. So I think that's worth noting. There's a 10-point differential between female and male votes coming in thus far. On the other side, if you look a little bit deeper, there's something that's been neglected and hasn't been spoken of too frequently. And that is that there has been a very material shift in voter registration between the two parties over the last 4 years. And I also pulled up some of those numbers. This is a result of several weeks of research that we've been working on. But in Pennsylvania, of course, the most important state as far as I'm concerned, the registration advantage for Democrats over Republicans has dropped from 7% to 4% over the last 4 years. That's a very big shift, considering that it's a state that was decided by 10,000 votes essentially last year or last election. So that's, and then also just a moment ago, within the last couple hours, the American First Party Institute, which is a Republican get out the vote effort, put out a press release saying that over the last year, on an initiative that began over 1 year ago, they have contacted over 10 million voters in the state of Pennsylvania. And I think that's very good news for Trump. As to how effective they are is another question, but making contact, and they qualified contact specifically as either door-to-door canvassing or text interaction. 10 million voters over the last year. So that's the American First Party Institute. In the state of Nevada, the Democrats had a 22% registration advantage 4 years ago, but their numbers have dropped 4% while the Republicans have gained 8%. So what you've seen in the last 4 years is more Republicans being registered, and the ratio of Democrats to Republicans shifting materially. In Arizona, the Democrats are down 2% from 4 years ago. And in North Carolina, they went from a plus 5% advantage to a mere plus 1% advantage over the last 4 years. So the shift in voter registration, not necessarily a foolproof indicator of vote outcome, is pretty material. It's definitely worth saying. And if we end up analyzing this, if this ends up being a key factor after the election, and we look back and say, sure, there were a lot more Republicans registered this time around, that blame is going to come back to Joe Biden for staying in the race too long. That's the early, I talked to some people about this who said, well, if Biden would have jumped out earlier, we would have increased the enthusiasm, which is clearly evident on the Democratic side. Harris has really had a spike of enthusiasm for the Democrats since her candidacy was declared. Those numbers are noticeable, but had they have had 6 months to work with that, you probably would have seen increased Democratic voter registration as opposed to, the 6 weeks that they've had to work with. So I think that those are really important things to look at. The Republicans have had a favorable shift. For everything I can find on the Republican side, I can find something to offset it on the Democratic side that says this is a close election and we need to be looking carefully in Buck and Erie County in Pennsylvania on election night to see how those key counties turn out.
Well, Jeff, I think Nate Silver said it best. Early data doesn't reliably predict results. 4 reasons why you're better off ignoring it. It's a part of the Silver Bulletin that he put up yesterday. I would recommend everyone go to check it out. Before we wrap up here, a quick bit of housekeeping. Tuesday's election day, November 5th. So we're going to be doing a special episode of the prediction trade Tuesday afternoon, same time as we usually do it on Thursday. So be sure to come back for that. We're going to do a little precap and then a little bit of recap. Tuesday precap, Thursday recap here for the prediction trade, because this election may not be decided by Tuesday night. For Jeff Joseph, I've been Chris Vecchio. Thank you for tuning in for this episode of the prediction trade. And remember, always wager responsibly, believe in math, master your trade, and join us next week on the prediction trade.
Stock markets take it on the chin. A bad day here all around for U.S. equities. Sharp declines in the S&P 500, sharp declines even in the tech-tilted NASDAQ, despite another batch of seemingly solid, not terrible by any stretch of the imagination, earnings from the Magnificent Seven come companies, this time results from Meta and Microsoft. The market's not liking it at all, and now face the crescendo in a busy week of economic data to cap things off. I'm Ilya Spivak, head of Global Macro here, and this is Macro Money. We're going to go all through it here, taking a look at what the markets did, which levels they find themselves at, and what they mean in the wake of this brutal sell-off, and then consider what this incoming economic data, the U.S. jobs report for October, might do to shape next steps, and perhaps more than anything else, consider whether this even matters, whether we should care about this jobs data as we look to the onset of the U.S. presidential election in the early days of next week. And that's really where the conversation is going to begin. When we consider here that we have a very, very significant, let's call it, event risk in the immediate several sessions. Would the markets even consider laying out risk capital no matter what happens with economic data, no matter what happens with the broader story? Is anyone going to be motivated and have conviction to put on any kind of exposure this way or that before an event risk with so much built into it? So let's begin with a look at how the S&P 500 did today. Obviously, that is an ugly, ugly candle. The decline here looking like the worst one-day performance in almost 2 months. It doesn't get much better when you look at the NASDAQ. Here, also a violent sell-off, and that's not, again, withstanding the relatively supportive earnings numbers that we saw from Microsoft and Meta. This is the fourth, seemingly, in a series of letdowns. We didn't really get much follow through to the upside from solid Alphabet earnings earlier in the week, nor very impressive, as a matter of fact, Tesla earnings last week. So the Magnificent Seven, as they've become called, the big cap tech companies that account for the lion's share of strength in the U.S. stock market, their earnings seemingly not impressing the situation. Now, it's unclear in my mind why today was the day that the selling had to be catalyzed if we were to look at the raft of scheduled event risk, why this was in particular the day that the markets were going to get reactive. It could be that it's the last day of October, and so there's some end of the month squaring, especially as we look to that U.S. election in the first days of November. It could be the perking up of geopolitical tensions, another missile from Hezbollah striking Israel with casualty numbers starting to rack up, and Iran threatening maybe to get engaged again. So that could be, but this sell-off started before those headlines started to cross the wires and, for example, bid up crude oil. So it's not clear, other than a general crack in risk appetite, what sort of catalyst accounts for this kind of defensive posture. And what's perhaps more relevant to consider isn't so much why this happened when it's not plainly obvious by pointing to an economic calendar or an earnings calendar and saying, look, there it is what happens next given what is on the calendar and how markets in this fragile state might digest it. And this is where we turn to October's jobs report, where the expectation is we're going to get a meager 113,000 jobs added to non-farm payrolls. That's obviously a relatively small number. The last time we had anything comparable was April of this year at 108,000. You see that on your screen there. And so this would amount to essentially a retreat into the lower part of the 6-month range. So not offsides, not out there weakness, but certainly weaker than the recent range of outcomes. The unemployment rate seen holding at 4.1%. The wage growth reading, which isn't on the chart here, seen holding at 4%, as we just learned from the latest PCE numbers, which, as anticipated incidentally on in our discussion yesterday, topped expectations a bit at the core, but nevertheless, the headline inflation rate they gave us was 2.1%. So wages at 4% are at this point growing at nearly double the rate of inflation, and extending a trend going back to April, May of 2023. So wages have now been topping the rate of inflation and essentially playing catch up with the cost of living issues that were created by that spike in inflation after COVID, and working it down for now over a year. So as 15 months, as a matter of fact, if the current numbers in the forecasts hold up. So with that in mind, we are looking at a report that, at least in relative terms, isn't perhaps worrying for growth, isn't worrying for consumption, as long as whatever weakness here is episodic and doesn't then extend more broadly. So as long as wages continue to grow by a widening margin relative to inflation, as long as they keep consumption thereby underpinned and keep improving the cost of living situation and affordability, then we probably don't have a risk to overall U.S. growth from data like this meager 113,000 rise in payrolls, unless that's the beginning of a trend, unless this extrapolates to further weakness. And it seems like that isn't what the markets envision here. There is some sense, perhaps, of resignation that there's going to be a weaker number here as perhaps a one-off, or at least as something of a shorter-term issue than a longer-term one, because, of course, the economy in the reference period for this data was battered by the two big hurricanes, Milton and Helene, and we likewise had strikes across the country, notably at Boeing, but also across hotels, for example, in California, in Hawaii. So you have a situation where you probably are primed somewhat in the markets for a weak result, and that need not spook anyone per se, unless the result actually beats meaningfully to the top side, in which case you face asymmetric risk that everybody is positioned perhaps for weakness, and that's what's priced in. But actually, if the result is higher, that's the bit that the market hasn't discounted to the same extent. So even a number lower than 113 might well be written off as, well, these were the idiosyncratic factors that we were anticipating. They just had a little bit more of an effect than we thought, versus the number is meaningfully higher, and then the entire calculus needs to get turned over. There is some reason to suspect that you could be looking at this kind of a scenario. We look what's happened with U.S. economic performance since late August. We see that U.S. economic data has increasingly improved relative to expectations. Moreover, the momentum continues to build. So it isn't just that as of July, August, U.S. economic data was increasingly underperforming by a wide margin relative to baseline forecasts, suggesting, of course, at that time that maybe the Fed is too late to cut rates, which is why when it finally announced that it would start to do so in July, the response was negative from stock markets initially, because they looked at it and said, well, you're behind the ball at this point, because the economy had been deteriorating since mid-April, looking at the tenor of the news flow. But then in late July, not only did we get out of negative territory on this index, which would imply that the data tends to surprise down, and get back above zero into the territory where data tends to surprise up relative to forecasts, but the incline of this change, that's continued to steepen, meaning that reality continues to accelerate away from baseline expectations and give us a rosier picture of the U.S. economy, not only directionally, but momentum-wise, relative to what analysts' models are anticipating. So this 113 on non-farm payrolls might be a significant departure from just how strong job creation actually turns out to be. We got a little bit of a preview of that in the U.S. ADP employment report. It's, in fairness, not always the most representative, but it is worth looking. And what we find here is that we have a dramatic surprise higher relative to expectations, a rise in private sector payrolls of 233,000 against expectations of 115,000, which of course would be only 2,000 away from what is currently being expected for this official release. So what we end up with then is a situation where we have this sense that maybe the surprise to the top side starts to look comparable. And of course, if it does, then we have a situation where the markets have a big rethink that they will have to do. Get some similar inclinations from the latest PMI data, Purchasing Managers Index data from S&P Global. We haven't seen the ISM version of this data yet. Actually, the manufacturing sector will come out tomorrow after the jobs report, and service sector data is due next week. But what we get from the PMI version from S&P Global is an interesting sort of indicator. So it says that employment fell for a third month in October, but though the decline was only very modest and less than reported in August and September. On the one hand, that sounds ominous. Falling employment isn't good, but consider what this says. It's saying that employment fell for a third straight month, but of course, looking at the official data here, we know that in NFP terms, it did not. All these numbers are above zero here, going back to early 2020. So what we end up with is just the realization that the PMIs are different numbers. They're diffusion indexes. They're not absolute figures. So what this is telling us is that the pace of job creation cooled for the third consecutive month, but at the slowest rate in 3 months. In other words, October marked an improvement over the labor market as the PMIs shape their perspective around it in August and September. And if we look at what that would mean here, here's August, here's September. that would mean that the labor market, at least broadly in directional terms, improved. And if that were to give us something similar, or at least something meaningfully better than 113 on the headline number, if we can sort of thematically extrapolate that if the direction from the PMIs is for improvement in October versus August and September, well then a pullback to 113 is not where that is going. That, of course, raises the question of what it would mean for hot economic data to register in the context of Fed policy expectations. After all, not only do we have the election next week, but also a Fed policy announcement. And we can see that since the Fed issued its 50 basis point cut in mid-September, the story in markets has been one of increasingly hawkish reconsideration, where the markets have been cutting into Fed rate cut expectations, as we've seen, of course, this upshift in economic performance. So as the economy has become better, and that has fed inflation expectations, the markets have said, well, that means the Fed is going to be in a position to do less on stimulus, even after this initial 50 basis points was delivered. So if we look at where we are at this point, we are looking for a mere 110 basis points in cuts between now and the end of next year. That's a far cry from what the Fed's own forecast in mid-September would have implied. They said 200 basis points between the start of the cutting cycle and the end of next year, of which 50 is already in, leaving 150, two more cuts, November, that's next week, and December, and then 100 basis points in further cuts next year. Well, that's about 40 basis points lighter, what we see in the markets, than that Fed forecast. So as we consider then what comes next, note stocks have been pulling back as the latest round of hawkish speculation started to take shape here. So we find that this area, established right in the wake of the Fed moving initially to cut rates, is precisely where we've ended up again. So we tried higher, but then returned right back to this initial starting line, thanks almost certainly to some extent, in my opinion, to a significant extent, to this reshaping of policy expectations. And of course, if we get a hotter jobs number against this context, well, then this move may well have legs to continue. We already have markets fragile. We already have them looking at major event risk by way of this election, and we would be essentially adding higher borrowing costs as a kind of poison cherry on top. So that would, needless to say, run the risk, at least, that while markets could initially cheer a positive jobs number because more jobs is overall a good economic outcome, once the dust settles, the response from stock markets may be negative and may actually extend this decline ultimately as higher interest rates downstream are envisioned. Now, one more bit about the event risk. We can see here that the recent sogginess in stock markets has come along with a shifting of the betting odds in this election. And we can see that the direction of the shift has been closer in the direction of a 50-50 outcome, which is essentially where the polling numbers are. Now, regardless of what candidate is going to be this or that for policy. There can be ample arguments made on this side and on that side. And as traders, we're not interested in partisan politics. We're interested in making money. And so our perspective here is purely from that angle. And in seeing this move from a bigger gap to a smaller gap, very simply hints at greater uncertainty around the outcome. And if there's anything the markets hate, it is uncertainty. They can ultimately benchmark to this, they can benchmark to that, once they know what the result is. But if the result suddenly appears less certain, well, then there is increased volatility risk and an increased unease. If this continues to happen, stock markets face further concern. And the path of least resistance, at least recently, seems to be that way and probably is biased that way as the event itself grows closer, giving a bearish overhang to the stock's story more generally. Moreover, if there is a decisive victory for Vice President Harris, there's a strong possibility, looking at past experience, that former President Donald Trump is going to contest the results. At least that's what he did last time, which would extend uncertainty. So before we get into any sort of conversation about policy, any sort of conversation about what the markets will ultimately like from this grab bag of economic agenda items versus that one, before any of that enters into the fray whatsoever, or really any consideration about this candidate versus that is favorable for markets even has a chance to happen, the first conversation is about certainty of outcome. And as that certainty appears to slip a bit, obviously these are betting markets, this is not the gospel truth on what reality is, but if at least the perception is that the certainty around the outcome is starting to give way to a more clouded picture, then the markets are already dealing with a significant overhang for risk sentiment, and higher interest rates, if strong U.S. jobs data is what we end up seeing, they're not going to appear helpful. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back on with Chris tomorrow for Futures Power Hour. I'll be back again for First Call with Tom and Victor on Sundays. I'm writing for the news and insights portion of tastylive.com and opining sporadically on the platform formerly known as Twitter at Ilya Spivak. If you're watching this on YouTube, like and subscribe. Macro Money will be back next week. Happy trading.
What is going on, and welcome back to the Bad Taste segment. Today's it's spooky season. Happy Halloween, Julia. I love the cat ears, right? I know, right?
I got some little horns, actually. I'm not that.
Oh, horns. Okay, man, that's how you know I don't have a cat. But anyways, happy Halloween. Today's Thursday. We had a little bit of a sell-off in the market today. We have elections coming up in a few days, so we'll see what we get. But thanks for joining us today. And Julia, how are we doing today?
I'm excited that it's Halloween. It's a fun holiday. It's spooky season. What's up, Bad Traders? Lone, it's awesome to see you. Thank you for joining us. I don't know. I'm excited for a fun day. We did have 2 very nice days of weather. Now it's going to get cold again, but whatever. What are you going to do? At least it's not snowing. I remember Halloween's when it was snowing. So this is, it could be a lot worse. But that being said, today in the market was pretty rough. I think every single position was a loser today. How about you?
I mean, to be honest, today was actually a pretty positive day for
Was
me,
it
at
actually?
least. I know we talked. It was. I scalped a little. I scalped a little bit of the Nasdaq to the downside this morning, and then I sold a call spread on QQQ, so that came in a little bit. But what really stood out today in the portfolio, which I did say I wasn't going to be trading earnings, but Dr. Jim, the little devil on my shoulder, he got me into it. And, I was like, you know what? I'm down. Let me just do it. I'll sell it out a little bit further out in time just in case, because we know how earnings can be. But it was Microsoft. I know Microsoft had a pretty big donk overnight and today. So I sold a call spread out there, sold it in the December 20th cycle. So I was like, you know what? Again, I wasn't really trying to trade earnings, but if I did, I wanted to sell the vertical spread, and then I wanted to do it with a lot of time on my hands, so that if anything went south, it had enough time for it to, get back within control. So because of the big move in Microsoft, that ended up coming in today, sold it for, I think I collected a little over $2 in credit, made over a little bit of 50% in credit received. So I think that story really tells how far and how aggressive Microsoft went to the downside for me to be able to collect that much back, considering I sold the December 20th contract. So I ended up taking those off the table today. And then other than that, really just that QQQ call spread that I still have on sitting in there. And I think I'll hold that one through elections. But, other than that, not too much for me. But it was a slight green day. And I'll take what I can get in this market, especially ahead of elections. What's been standing out to you mostly? Any type of underlyings, any earnings? What's been going on in your world?
Everything, man. Today was a weird day. Flower Power, Dan, Mind Power, is awesome to see you guys. Today was a weird day. And we have some big names that actually just reported kind of surprising results. We'll get into those in a second. But it's a cold day in hell when Peloton jumps 30%. 30%, Microsoft sells off 6%. Like that's a spooky price action if I've ever seen one.
What is this, 2020? Is this 2020, 2021? Was that when Peloton was popping off?
Dude, basically, because here's the thing, right? So not only did Peloton jump like 30% today, who would have thought? Roku also donked. So like just names that I haven't paid attention to in years. Roku donked like 17%. Estee Lauder, whatever, dropped by like 21%. And everything crypto just donked. So I don't know, man. It was just such a weird day. Carvana jumped by 20%. I think like Luis, what was Luis saying earlier today on stream when we were on, it was like that they're the most valuable vending machine company on earth maybe right now. Like, so
I just don't understand. All of these names are nostalgic. That's what it is for me.
I mean, yeah, dude, tell me about it. And then Starbucks was flat as a pancake, which I was pretty surprised about. ConocoPhillips stonked 6%. Etsy jumped 7%. Altria Group jumped almost 8%. And then, we had these big names across the tech sector. Uber dropped 9%, Microsoft down 6%, Meta down 6%, MasterCard, funny enough, in payment processing down almost 3%. It was just what a weird day. And like Flower Power, we're back to Peloton and Carvana. Like this is just like 2021 happening all over again. It's crazy.
Yeah, I guess we got to get in our bag of the 2020, 2021 era. I mean, 2021 underlyings are popping off, but what's not popping off is, the volatility index is up on the day. I will give it that, but it's not sitting at around the volatility that we were used to back in 2020, 2021. But we are sitting above 23. What are your thoughts on that, Julie? It's better than below 9. It's better than below 20.
It's better than below 20. We're officially like above average with like the S&P. Dude, what a wild move today. It wasn't even like the biggest move in the world. God, I can't see there. It wasn't even the biggest move in the world. The S&P dropping like 2%, right? That's like not even a 2 sigma move, right? Which 2 sigma move, to be fair, is very big. Those are very rare. But it's maybe, I actually calculated this earlier, it's like a 1.5 sigma move, something like that. With SPY, so for SPY, it was 1.8, so almost 2 sigma. With the NASDAQ, also 1.8. Russell was actually the least volatile of the day relative to, the Russell, about 1.2. So just a little bit over standard deviation move in the Russell. But I think what's weird is that the things that donked really donked, and the things that stonked really stonked, and the tech sector got hit like especially hard. And then gold sold off by like 1.5%. That's crazy.
I know gold was going on a little bit of a tear, wasn't it? Do you think it was a needed cool off period, or you think it just pretty much followed everything else in the market like today?
This is just weird. Like it's hard to kind of make sense of it because like, I was talking about this earlier on the show today, which is that like, right. So like typically gold and the market indices have pretty negligible correlation. Like their correlation is pretty close to zero. It obviously depends on which time frame you look over. But when you have a really big move in the market, that, zero-ish correlation tends to become even stronger negative, like stronger inverse correlation. So when you have a very large sell-off, for example, like, across the broader market, today wasn't the sell-off, but when you have a really big move like this, typically what you see is actually the inverse relationship becomes stronger between gold and the market indices. And today we saw the opposite. Everything just kind of donked, except for like energy and utilities were really the only sectors that had like stronger days, a stronger day today. And then apparently from Peloton and Carvana, which is like absolutely just bananas.
Yeah. Before we shift gears here, like what are your thoughts on Carvana and just kind of their business model? I mean, it's like a vending machine for vehicles. That's not anything we've ever seen before. Do you think it's kind of like a cool idea, maybe not feasible, or it's like, give this thing a little bit more time, I can see people ordering vehicles through a vending machine? What are your thoughts on it overall?
Dude, their numbers, we were talking about this today, their numbers are, I don't know. Their numbers got really good really fast. Let's put it that way.
Okay.
Luis put together actually a great slide talking about Carvana earlier today. And they went from like 10 years ago, netting an average of negative $400 per car to $7,000 per car. And they're a used car company.
Wow.
So their numbers have gotten very, very good. I think with like SMCI, and discussions of fraud around SMCI, which continued to sell off today, by the way, we'll check into that in a second. But I think I'm kind of on high alert. My horns are on high alert, I suppose. Dude, I don't know, dude. It's just a wild day, and especially to see a move in gold like this was very jilting, I guess is maybe the word that I'd use. And then SMCI sold off another 12% today. Of course, it would be like right after this thing joins the S&P that it starts to just completely tank over in news, or concerns around potentially fraudulent behavior and activities from the company. So of course, it would be like right after it joins the S&P, wouldn't it?
No, I mean, of course, of course, that's the reaction. But I mean, just looking at SMCI on the weekly, and then zooming out for 3 years, I mean, wow, this thing absolutely took off to the upside, and it's looking like it's giving back most of its gains all the way back to like January 1st. I mean, the beginning of the year. So it looks like we're kind of break even on the year. Like if you were to invest in SMCI at January 1st, at New Year's, the beginning of this year, you'd be sitting close to break even as we speak, considering this thing has went up multiples of hundreds of percents throughout the year. So I wouldn't have seen that coming. I mean, if this thing would have pulled back, I just wouldn't have expected it pulling back this hard. But I mean,
also not for a great reason. It's not for, it's also not for a great reason.
Good point.
Predominantly concerns around, like fraud and other shenanigans. NVIDIA, let's take a look today. Pretty much, every sector was down. I was looking at the heat map actually on Bad Trader today. If you guys want to go check that out. I find it really useful for getting like kind of a daily market digest. But like 70% of the stocks in the S&P were down today, which we've seen it be a lot worse. But it felt, I think, like heavier because like 90% of the tech stocks were down. Like 90% of them were down, with really only energy and utilities having a kind of a decent day. But that I would say was not even ubiquitous. That was like 68% of energy companies were up today. Looking at the heat map right now, and then like almost 80% of utility companies, which represents a very small number of companies in the S&P. SMCI seems to be like a Batman villain. It's pretty accurate. I'm gonna take all your money, Batman.
Villain origin story. Wait for the
shit,
comeback.
Bananas. What a weird day. Weird day. And silly me, I wrote this whole piece on diversification. We didn't have time to do it, but I was pretty proud of myself. I'm like, we got this diversified portfolio. We got, SPY and the NASDAQ, and we have Condor on in here and then shares. And then we have the Russell, which like the correlation between that, like the Russell and the other indices is like not the highest, which, okay, good. And then we have gold, which is supposed to add that diversification, and then just everything donked today. So I kind of I was trying to be responsible and not put on a ton of new positions today, because I know that I don't want to take these at a loss just to throw the capital somewhere else. Because honestly, I feel like this is a bit of an overreaction, but I mean, tomorrow's going to hold a lot more, I suppose.
No, I mean, I hear you in a sense. over the last couple weeks, I've been trading in drawdown. So even for today, like I see an opportunity, I wanted to trade it to the downside, and I was like, I got to just take a little piece of the pie. And it's just like, especially ahead of elections, the market conditions we're kind of in. It's like, man, I wanted to use a little bit more, but at the same time, it's like, got to stay disciplined, got to stick to the rules. So, I mean, I feel you in a sense, not in the same way, but in a sense, I will say. In a sense.
In a sense, there was this funny analogy to FOMO trades. I think it was like Big Deal Donuts was talking about it earlier today. I don't know if they're over here floating around in chat right now, but they were saying like, because like vol is up across the market, and there's like high IVRs, high IVPs, pretty much everywhere, and it's like it feels like you're fishing and a bunch of fish start jumping on deck, and you don't know which one to grab. And so the analogy is that like, well, they might be piranhas, right? So don't get into a FOMO trade because you might go grab for a fish that hops on the deck and then it bites your finger off. Because I've been scorned on so many piranha trades. I guess we'll put it that way. But
I like that analogy. I've heard a lot of analogies. I haven't heard that one.
That's a bit of it's a total stretch. It was a funny moment though. I don't remember how that came up, but that's our FOMO trade analogy of the day, I guess. Oh God. But yeah,
big deal. We do have Big Deal right here. Yeah.
No FOMO
trades. Might said pie.
Pie. That's right.
A piece of the pie. I just grabbed a piece of the pie.
Oh man, let's take a look at how these different companies have been reporting. So we had some very large names actually reporting today. We had Amazon, Apple, and Intel were the big ones. And look at that actually. So there were, I think, like, if I recall, discussions around Apple potentially acquiring Intel, which would be insane because they're both like tech.
What?
I know, right? Tech giants.
Yeah.
Which like Intel's fumbled the bag pretty hard. So that's why I was surprised to see them actually up a couple bucks after reporting earnings. So like, yep, they're actually having a pretty good, I usually dive into the earnings report the following day when reporting is a little bit more, I don't know, finalized or a little bit more ubiquitous. But evidently the stock's up a couple bucks. Amazon is having a very good day. I guess people made a lot of Halloween orders. This year, Prime Day must have gone pretty well, up $10, very big mover. Apple down $4, which I don't think anyone is really surprised about. Their order numbers for the iPhone 16 were pretty low.
Yeah, I know Terrell had brought that up the other day, and there's usually a lot of hype around, the new iPhones coming out every year. And then I was like, wait, the last iPhone released, it dropped. Like I haven't even heard much chatter about it. So I guess that is not too surprising over here. But do you remember the game? Go ahead.
No, what game were you gonna say?
Do you remember? Do you know that game? And kind of back to like Apple acquiring Intel, but you know that one game? It's like a dot. And you go around and you try to eat the smaller dots and you get bigger. That's kind of what I've always thought about in my mind visually whenever I thought about like bigger companies acquiring more companies, and then like you get bigger and then you're kind of a larger powerhouse. But whenever it came down to acquiring companies, that's kind of the visual I've always had in my head. But I mean, if Apple acquires Intel, I mean, that is a big acquisition. I'll be curious to see how the reaction and how the shareholders kind of respond to that.
Bananas. These are also rumors, by the way. We got to preface this. Just rumors that have been kind of going around the financial media space. So this is from WindowsCentral.com. Intel could potentially be on Apple's acquisition portfolio amid financial struggles, emancipating itself from over-reliance on TSMC for chips, but Samsung could have a better standing. So just like general, discussions, rumors, you have to, rumors. Don't sue me, please. Around potential acquisitions of Intel after they fumbled the bag really hard. I honestly, I mean, there's a lot of time before the open. So to see where Apple sort of winds up on the day, but I kind of like, it's not the worst move in the world, like for earnings. I kind of thought that they've been hedging I need to stop saying that. Managing investor expectations decently well, talking about like, hey, just so you know, iPhone numbers and production numbers are a little bit lower than we anticipated. It's an iterative release. And so I felt like, people were expecting their earnings to not be particularly good. I don't know about their guidance, so I'm going to have to dive into it tomorrow. And so I was kind of expecting maybe like a little bit of a down move, but not the worst in the world, but we still got a lot of time before tomorrow.
No, I hear you. And I'm glad you pointed out those were rumors with the Apple and Intel. But I mean, rumors start from somewhere. It's like, where did we get that info? We got that info from definitely not a rumor.com.
Definitely not a rumor.com. Actually,
definitely not rumors.com. That must be real.
I kind of want to see. Definitely not a rumor. Is the Suez Canal still blocked? Definitely not a rumor.com isn't taken.
Really, we could start a website like that, Julia, and then we could
That's
just do
not
it
a
where it's like
bad-
everything that
Actually, very
everything on
surprised.
there has been fact checked. Like
Yeah.
definitely not rumor.com, and like any information you go on there goes through like a filter that fact checks everything. That would be kind of fire.
That'd be kind of cool. I'm kind of into that. Yes.
Yeah.
The Qs are up a little bit post market, post the close, post Malone. Oh God, it's
Post
been
the
a long day.
close.
Post the close. So I don't know. Hopefully we're gonna have a nice little green day tomorrow. Amazon and Intel evidently leading the charge a little bit. But yeah, today was a rough day, but it's also, I mean, for me, it seems kind of like noise a little bit. Like the long-term, I don't know, paradigm shift is what I'm calling it in the market, I think is maybe going to be catalyzed by next week, maybe a little more, is at least how I'm feeling about it. But I don't know. We'll see what happens tomorrow.
Yeah, most definitely.
Oh, yeah. So Snopes 2.0, you got it. We do have just about 8 minutes left. I want to make sure we have enough time for trivia. So let's hop into the slides real quick.
Yep. Before we do that, what do we got, Julia? We do. I think we have an app, right?
We do indeed have an app. It's got some pretty cool stuff on it. We made some sick updates, and we're about to make another sick update, hopefully next week. So if you want to go download it, we'd love to have you. It's in the App Store and the Google Play Store. We got a heat map, we got a stock screener, we got some cool portfolio accoutrement. So that's where you can find it. We'd love to have you. And then as well, if you want to come throw your trivia answers into chat and participate, you can find us on Tasty Live's YouTube channel at Tasty Live Show. If you want to follow us on X, Luis does a really good job managing the Twitter. He talked about the SMCI gigadonk from, before anybody else did, at least in my feed. And I thought that was very cool. Very cool information on there. So if you want to come find us, it's at Bad Trader app on X. So what is the category for trivia today?
Yeah, so I mean, if we jump into the first slide, I kind of put the title of the slide. So Tencent, I know we talked about Tencent briefly on Tuesday. So this one is Tencent in the video games they've acquired or invested in. So that's going to be the theme or category for today.
Okay, awesome. So Tencent and the video games they've acquired or invested in. Let's go ahead and go into the first slide. There we go.
Awesome. So which popular battle royale game, co-developed by Tencent and released in China as Game for Peace, has been a major player in the mobile gaming industry with millions of daily active users worldwide? I know the battle royales have gotten a lot more popular, especially since like 2018, 2017, but the four options we do have is Fortnite, we got PUBG, Call of Duty Mobile, Apex Legends Mobile. Which one is it?
Osborne Graves, I'm out. That's okay. Feel free to give a guess anyway. I thought it said tentacle. Jesus, we're not there yet. Okay, so they do make Fortnite, don't they? They make Fortnite. I just don't know if Fortnite's a battle royale game because I live under a rock. Call of Duty.
Fortnite would be a battle royale for sure.
Apex Legends mobile game is what Grumpy Mike says. That's a good, I don't know. He also said Angry Birds. 2 people have said D so far. I feel like I should know this. I know they are, I believe they actually created Fortnite. Someone can correct me if I'm wrong. Not Fortnite, not Call of Duty. Okay, never mind Mindpower. I don't know if Fortnite is I thought they did Fortnite, but I don't know if it's a battle royale game. B from Lone PUBG Mobile, which I should probably know, but everyone's going with D. And I think everybody's also kind of at a loss. Oh man, I should know this better. A bunch of people are saying D. Just to piggyback, so I'm gonna say D as well. Is it Apex Legends Mobile by any chance?
This one, oh. This one is actually PUBG, but a fun fact: Tencent's version of PUBG Mobile. First, have you heard of PUBG, or are you familiar any at all? Okay.
No, I actually haven't.
Okay. It actually used to be one of my favorite games. Not the mobile version, but the version on PC and console. But Tencent's version of PUBG Mobile, Game for Peace,